Just one sec, guys. I'm pulling up the video recorder. Get this recorded for people who aren't able to make it today, and then we will be all set and ready to go by another minute or so. Right. Welcome in, everyone. We got a decent crew today. Hopefully, some more stragglers will follow through. All right, so I'll just do a little quick intro and then I'll pass it off to Colby. So the way that this call is going to go today is Colby's going to run us through his wheel strategy, talk about selling covered calls, selling cash secured puts, how he uses the strategy to generate some income and premiums on stocks that he is holding and wants for the long term. I had the opportunity to hop on a few calls Colby in the past, and he really, sold me on the whole wheel strategy. I was pretty uneducated on the wheel strategy and just how all of the stuff worked, and he was very good at walking me through all the different steps, answering my questions. So obviously, I know that some of this is going to be very new to you guys, and what I want you to do is if you have questions during the call, just throw them in the chat. Colby's not going to answer them right away. We'll do a Q&A at the end, but if you have a question that you think of, throw it in the chat, and then once we get to that Q&A, at the end of the call, we'll just go through from the top down all of the questions that were sent in the chat. So without further ado, Colby, if you want to just give yourself a quick introduction to everybody in the call, and then you can get.
Awesome. I appreciate that. Yep, my name's Colby. I've been investing, I'd say, for the past 7 years, and then picked up the wheel strategy for the past 2 years. And I just love it. Okay, it's generated the flexibility to, I wouldn't say retire, right? I'm still working and constantly looking at the stock market, but I've been able to leave my old full-time sales job. So it generates monthly income as well as allows us the flexibility to use our capital to make more money than it just sitting there waiting for the stock to go up. So instead of just, waiting for everything to recover, I can generate monthly income while we sit here in downtrends. So that's the goal. I wanted to kind of go over the process exactly, and kind of go over the downside, because everyone's got the big question you guys are going to ask is what's the downside, and it's there's not a whole lot to it other than a stock going to zero like a stock would normally do if you bought it. So I do want to go over all that. We're going to go over it step by step, and then like Trevor said, we'll answer any questions at the end. Ultimately, the wheel strategy is buying and selling stocks for the price that you want to buy it for and selling it for the price you want to sell it for and getting paid to wait for that to happen. All right, so we're going to go through it. I'm going to go through, the first thing is going to be setting up a chart. I believe is the best way to start, so you guys can understand kind of why I do it, when I do it, and everything like that. So I'm going to go over the chart. This can be done on any charting system. It does not have to be TradingView. You can do it on Robinhood. You can do it on Yahoo. Everyone has these indicators, so that's the nice part. For specifically just the basics of the wheel strategy. Okay, so when we go to TradingView for me, okay, the few indicators you want is called a Bollinger Band. Okay, Bollinger Band, this just uses BB, but if you type in Bollinger Band, BOLL, it should populate right away. And you are going to want the link to 30 because we do the wheel strategy based off of 30 days of premium being generated. I want to do monthly income. You can't, so Grover, can everyone else see my screen, or is it just Grover before I keep going?
I can see your screen just
Okay.
fine.
Cool.
Tom can see.
Grover, you might have to click on a few names or something to generate it. Okay. It looks like everyone. Okay. So the Bollinger Band is a good way to track, where a stock should rebound from, and bounce like a rubber band is how we treat it. So as the company comes down to this bottom band, it's usually a good time to buy. As you can see, we bounce off of here. We hit this top one, it rejects. Okay, so this is kind of when we sell. And this middle line is the 30 days of the 30 days recent moving average. So the past 30 days, where has the price been? Okay, and then this is 2 moves to the downside and 2 moves to the upside. So it's just a rubber band. When we get to the top is when we would set covered calls, and I'm going to go over what covered calls are, but ultimately saying I'll sell it for a certain price, and when it gets to the bottom, it says we'll buy it for a certain price. So Bollinger Band is just a rubber band, helps you understand when you are near the top to start setting covered calls, and when you're at the bottom to sell cash secured puts. Okay, so that's just like one indicator to use. That's the most easiest. A lot of you have probably used an RSI in your trading time frame. For as long as I've been trading, I've known what the RSI is. It was one of the first indicators. Basically, when it gets to the top of the RSI, it becomes overvalued. When it's at the bottom, it's undervalued. So when we're up here, right at the top, and this is way at the top, that's saying we're overvalued. We should be looking to set covered calls. And then when we're at the bottom of a band and the RSI is at the bottom, we should be setting cash secured puts. Again, I'll go over each of those things. And then the MACD is the other one you can use, which helps you understand where the momentum is, bullish or bearish. So that just helps you kind of understand when you start seeing this turning point. Again, covered calls at the top, cash secured puts at the bottom. So that's how you set up a chart. 3 indicators, and all of these should be free on almost every single platform. So you should be able to set up. So I'm going to go over, that's how you set up the chart. I'm going to go over what the wheel strategy ultimately is, and I'm going to just use Robinhood as an example because that's what I use. And so step 1 of the strategy is cash secured puts. Okay. And in order to do this, it requires cash. Okay, so you do have to have cash. Selling contracts or options is, what's the best way? I like to use the terminology as insurance, auto insurance. Everyone here, I believe, pays for auto insurance, health insurance in some sort of way. And that's what we're offering somebody here. Okay, so it's just saying I will buy a stock for a certain price on a certain day. So I'm sure a lot of you have talked about SoFi. I would think is a very popular one right now in the market. So I will go over with SoFi, unless there's a different one. But I think SoFi is probably the best one to kind of go over this. Okay, so ultimately SoFi is $15 right now. I want to buy SoFi for less than 15. So I can sign a contract right now saying I will buy SoFi for a certain amount. So let's go through the option chain. Okay. And I'm going to say I want to buy SoFi for $14. Okay. And I'm going to pick 45 days or less, and I'm going to go over each individual detail after, but I want to give you a broader idea to start before we dive into the nook and cranny of it all. Okay. So I pick 45 days or less. Okay. I'm not going to be a stickler about 47 days. Okay. But we can pick April 17th, 19 days out. Okay. And I want to buy SoFi for $14. Here it is. Okay. Well, they're going to pay me. Someone is going to pay me for this insurance 52 cents a share in advance. Okay. Now just take this in for a second. You are signing a contract to buy SoFi for $14 on April 17th. Okay. If the stock is below 14, you have to buy SoFi for 14. If the stock is above 14 on April 17th, you don't get the shares and you just keep the premium, the 52 cents a share. Okay. So there's 2 scenarios that play out when you sign this contract. You are either going to own SoFi for $14 a share and get paid this 52 cents a share up front, okay? Or it's above 14 and you don't get the shares and you get to keep this money that they paid you, okay? This is just getting paid to buy stocks that you already want to own at a price that you want to own it for. If you want to own SoFi for 13, you can try. It needs to be below 13 on April 17th to get these shares. But if it's not, you still made money, right? How many of you have ever said, I will buy this company when it gets to this price? Probably all of you. There's no way you're trading and you haven't said this before, right? So sorry, I'm going to say the terms that I like to use, but put your money where your mouth is. If you want to buy this company when it gets to this certain price, get paid to buy it. If it doesn't get there, then technically you wouldn't have bought the company anyway, and you just got paid to wait for the company to try to get to your price, right? Why wouldn't you do this? Right now I'm waiting to find out if I'm going to own SoFi on April 17th. If it happens, I get to own it for the price I wanted. If it doesn't happen, I made money waiting to find out if I could own it. Okay? So this is all you're doing. You're just trying to buy stock for a price, but I don't want to just buy a stock and right? People just bought SoFi for 17, 18 recently, right? The past week. They just bought the shares and they're just like, well, hopefully it goes up. Well, it didn't go up, right? So I don't want to just go ahead and give them my money and buy the shares outright. I want to say I will buy it for this price, but in order for me to buy it, you need to pay me to do so. And what we are doing is we are offering insurance, okay? So this person right here that we say we'll buy it for 13 if it's below 13, we're offering them insurance. They're paying us 28 cents to have the insurance. So if the stock went to 12 or 10 or 11, they could sell it to us for 13. But they're going to pay us insurance, right? Premium every month to buy these shares from them. So we're just offering stock insurance and getting paid to do so, which is for a company I already want to own. There's a few rules to follow, but that's what we're doing here. That's step one, cash secured put. Okay. In order to do this contract, what do you need? Okay. One contract right here, this one contract is 100 shares. Okay. 100 shares each for each contract. Okay. So I need to be able to have, for collateral wise, to do this contract, I need to have 13 times 100. So I need to have $1,300. And you go, well, Colby, why would I give up $1,300 to make 27? Totally get it. I wouldn't do 13. There's a few rules, like I said. This is a really safe play. This is really safe. Okay. But your goal and where you make the most money isn't just this position, just making this. This isn't the full circle, full turning of the table, turning of the wheel. Okay. This is you just trying to get shares. Okay. Get paid to try to buy stock. That's all you're trying to do. Okay. The next part of the wheel is where true wealth can be when you're trying to sell a stock for higher price than what you bought it for, right? That's where the true wealth comes in. But this is a good way to do it while you're trying to, try to, stack as many shares as you can and own it correctly. Okay. So there's a few things to look at when we are placing a cash secured put. Okay. For example, and I'm going to actually switch right now to ASTS because SoFi is at the bottom of the band. But I think ASTS, okay, yeah, ASTS, here we go. We'll stick with SoFi. I'm looking at it, but I'm like, yep. So here's SoFi. I know we've all kind of been paying attention to the weekly time frame, but we are at the bottom of the band, okay? When we're at the bottom of the band is when we want to be doing CSPs, okay? And there's a few other things we want to look at, but you can see that this MACD down here became really undervalued, okay? We're turning red right now, so we are going to be flipping. But what I want to look at is the option Greeks. Okay, and if you guys don't know the option Greeks, there's only really one you need to know for the wheel strategy, and that is the delta. Okay, and the delta is the likelihood of you getting assigned these shares, that the stock stays below this price by this date. And what I like is a 30 delta. Okay, so here's 28 delta or 35 delta. I would just do the 28 delta because this is a 30% chance that SoFi on April 17th is below 14. Okay, but there's a 70% chance I don't get these shares. And this is kind of the sweet spot where we found a good amount of premium and a good amount of getting assigned for like long-term wealth opportunities. Okay, so we like this 30 delta here. So That's why we would do the 14 and collect the 52 cents a share, which would put you at a break even of roughly $13.50 is what you would end up owning this stock for a break even. Okay. So this is what we would look at. 30 delta, bottom of the band. Okay. You want it to be a red day. You want it to be a red day because the premiums get juicier. As you can see, right? Negative 5% day for SoFi. This premium just got 40% better than it was the day before. So red days, bottom of the band, 30 delta. Those are the three main rules you need to follow for when you place a CSP or cash secured put. Okay. I want it to be a red day where my premiums get better. I want it to be at the bottom of the band. Okay. And I want it to be a 30 delta. Another thing you need to make sure, this is the most important rule. One, you want to own the company. If you don't want to own the company and you're like, oh man, but that premium is juicy, you're going to lose. I'm going to tell you it right now, you're going to lose. You have to want the company long term. Otherwise, don't do it. It doesn't make sense. Okay? Because the wealth isn't really built on premium. The premium just allows us to generate some income while we wait for that true wealth opportunity from SoFi, for example, 15 going back to 30, right? There's your 100% gain. Okay? But we're going to make premium along the way, which turns that 100% into maybe 150% in that time frame. Okay? So let's just say you got assigned now SoFi, you have the shares, which I think that's what I'm showing in my retirement account. The next step, okay, there's only two steps. There's really only two steps, okay? Step one, cash secured puts. All I'm trying to do is trying to own this stock, okay? Let's say you did right 14 for SoFi and the stock was 15 on April 17th and you don't get assigned. Guess what? You're still on step number one. You just do it again. Okay, now I'm trying to buy SoFi. Where is it at this time? Okay, the bottom of the band says 15 or the 30 delta says 15. Let me see if I can buy it this time. Okay, so all we're trying to do is get assigned these shares at a very good price. Okay, and if you don't get assigned, meaning they don't give you the shares because the stock is not below your strike, for example, SoFi was 14. If we're not below 14, we're back to number one. Now, if you are assigned the shares, okay, we're going to move to step number two, which is selling covered calls, which simple terms is all I'm saying is I will sell SoFi for X amount, and I will show you an example. I will sell SoFi for $17, and if SoFi is above 17 on whatever date, I have to sell it. If it's below 17, I just keep my shares and I keep my premium. So we're going to go over that right now, okay? So right here, actually, I have 600 shares of SoFi, and I said I will sell SoFi on April 17th for $19 if it's above 19. But if it's not above 19, I just get to keep my shares and I get to keep the premium. The total premium was 46 cents a share on 600 shares, right? 46 times 600. So I made an extra $276 to let SoFi just keep going down, and hopefully it goes back to 19. And if it doesn't, and guess what? I get to do it again and do it again and do it again. I keep making money, okay? So if I go to view all options, okay, all I'm going to do is sell calls. I'll go over more details and questions. Questions is really where this like kind of thrives and kind of get hands-on to understand where you're not explaining. But for April 17th, 19 days, like I said, I do 45 days and I like to do 30 normally, but April 17th right now is 19 days. So right now, if you own the stock, you could do 30 delta. So I could sell it right now for $16.50. So what I'm saying right here is on April 17th, if SoFi is above $16.50, I have to sell it for $16.50. Okay. If it's below $16.50, I keep my shares. So in exchange, they're going to pay me 48 cents a share in advance. Okay. But if SoFi is not there, just like everyone's predicting, this market's going to continue to just chop or go down or whatever it may be, right? Then this is just free money. You're just going to make a free $48 per 100 shares or 48 cents. So if I have 6 contracts, right? Again, that's another $282 to make while I wait, just like you would normally when you hold shares, right? You're just waiting for the stock to go back up. Well, I'm waiting for the stock to go back up, but I'm going to continue to make some money while I wait. I'm not going to just let my capital sit there and not make me anything in the meantime. I might as well be making some money. And if you go further out, like the 45 days, like I was talking about, to May, okay, your 30 delta moves up, by the way. So instead of $16.50, it's now $18. And I can collect that 63 cents a share and sell it for 18 instead of 16.50, because you're trading your time, right? Your capital is sitting there hung up in this contract for longer periods of time, and they're going to pay you for that. Okay, so 30 delta, again, this is a 30% likelihood by May 15th that the stock should be over 18. Okay. Now, I get a lot of questions on, well, what happens if the stock blows past your strike? What happens if the stock drops well below your strike? Like if I wanted to buy SoFi for 17 or 18 and the stock is now 15, what do you do? Right? Are there ways to manage it? Okay. Yes, there's tons of ways to manage this. If I go to this, and I'll show you guys, because you're gonna see my investing account after Friday, right? Everyone, trying to hide as much as I can for account balance. All right, so here, you're like, oh my gosh, Colby, you suck, right? Let's be honest, this looks terrible, right? Well, it's not, because the only difference is I'm getting paid. These are all buying. This is all me trying to buy stock. I'm trying to buy SoFi for 18, trying to buy SoFi for 17. Okay. But if I look at my premium for SoFi, I'm collecting $1.42. So my break even is $15.59 is really what I'm getting my break even to buy SoFi for. And they paid me $1.42 in advance, because I don't think by April 17th, SoFi can easily rebound and be over 17. I want SoFi shares, but I just want to get paid to buy these. And this was right before it dropped, right before Friday, or I did these a couple, maybe last week. But I can adjust this. I can kick the can down the road. I do not have to buy this on April 17th. I can completely change the date. Okay. So if I go to roll this option, or Robinhood says roll this position, I can change it. So let's just say instead of April 17th, I'm like, yeah, the war's going on a little longer. I want to kick this can to May. I can do that. Okay. I'm buying it for 17 on April 17th. I can change this to buy it for $17 in May, and they're going to pay me a credit of 52 cents. So they're going to pay me an extra 52 cents a share just to buy it 30 days later instead of buying it in April. Now you run the risk of not getting assigned these shares because, right, another 30 days in the market, a lot can change. The market could completely rebound. It blows past 17, 19, 20, and you just missed out because you kicked the can down the road, right? There's a few things to take into account. How bad do you want it? Is it still, is 17? For me, even SoFi at 17 is undervalued. So I personally won't be kicking the can down the road for SoFi. But maybe for my IREN one, I might kick half of them down the road, right? There's ways to manage, but you can still get paid to kick the can, okay? So we can definitely change the date. Now, if for whatever reason you're like, oh my God, SoFi is crap, like this needs way more time. Again, I can kick this can all the way down to January 2028, June 2028. Like we can kick this can as far as we want. Now, if I want to, we can also change the strike. Let's say I want to go out to July, okay? Well, I can go out to July and I can change my strike from 17 down to 16 and still get paid 52 cents. But what am I changing? What am I giving up? I'm giving up 91 days of time to adjust this, okay? So your time's worth something. You got to make sure your time is worth the roll as well. Okay, because sometimes you can get assigned your shares and just set covered calls right away instead of rolling this to not get assigned these shares. So there are a few more tricks to the trade, but you can manage the position and kick cans down the road, buy yourself a little more time. Robinhood and Fidelity, I don't know any other brokerages that do it, but all my cash sitting in those cash secured puts or CSPs are earning interest. So you guys know like cash money sweeps are in your account, right? They're paying you 3.35% on cash in your account. Well, Robinhood pays you that 3.35 on option collateral. All the cash I have sitting on as collateral to buy these shares is earning interest for as long as it sits there in the option. So I'm still earning 3.35% on that cash sitting there. So if I kick the can, I'm still earning some interest. I'm earning some premium. There's multiple streams of income coming in where that money is making me money while I wait to buy shares. I don't need to just buy shares outright and then just sit there and hope it goes back up. That's not what we're doing here. We're trying to gain on our capital in order to buy this stock. So I generate monthly income. If I need to pay a bill, if I have, like, for example, we had taxes, right, on the 10th, I had to generate enough income in the first 3 months of the year to pay for all of last year's taxes. That's what I do every year. That way, after 3 months in, I have about 8 months of just stacking premium. 3 months I have to give up for taxes, but the following 8 months is all premium. Okay. So if we go back to this diagram that I show you guys, okay. Step 1, try to buy stock. We're doing cash secured puts. I want to buy SoFi for 14. Okay. If it doesn't happen, we stay on step 1. We get to buy SoFi for 14. We go to this one. Now it's okay. Now I want to sell SoFi for 15 or 16, right? Now I'm just trying to sell it. Again, we go here. If it ends up selling, guess what? Back to step 1. Now you're trying to buy a stock. If you don't sell it, right? SoFi for me, if it doesn't go above 19, guess what? I'm just going to set another covered call. Just going to keep the wheel going, collecting premium along the way. Okay. Trevor, anything else that I didn't touch on before we get to questions or anything?
No, I think that was good. I have a couple of questions.
Absolutely. Yeah.
Actually, first off, I'll ask this. So, can you explain the rolling situation a little bit more in terms of like why someone would want to roll their options and how that whole thing works?
Yeah. So for me right now is the big thing is this war, right? They're saying, like, Louis just put the news in there, right? They're saying ground troops could be going on for 2 months, right? So do I want my money, do I want these to be assigned and then I'm sitting on shares for 2 months? Or do I want to let my capital still earn interest and kick this can so that way I can, like, buy my capital, my premium, some time to, like, generate? Or since SoFi's 15, I can move the strike, right? If the stock was to go down significant a difference, I guess EOS would be the biggest one, right? Like, it went from 10 to 5. Right? You would be like, oh, let me kick this can down the road, adjust it from 10 and see if I can get closer to 8 or 6. Bring that strike price down is the goal, is to adjust your position. Maybe you just didn't time that right and you need to adjust, because right here for SoFi, right? If I'm doing 17 and I got to buy 100 shares, that's $1,700. But if I roll this out to July and I do 15, okay, they're going to pay you, well, right now it's like a break even 0. So you're not going to get any more money for rolling, but you are going to move your strike down too. So instead of giving up $1,700, right, you're now going to do $15. So they're going to give you back $200 of your capital because you only need $1,500 to buy this position. You don't need $1,700. So they're going to release some of your capital back to you. So now you have $200 to put somewhere else in the market, right? You can kind of better your situation. And that's all it is. It's just trying to better your situation because the stock maybe went against what your thought was, the thesis, or macros came out, whatever changed. You want to be able to adjust. And that's kind of why I'm okay with all my cash really sitting in this market. I still have 10%, but for the majority of it, it is sitting in these CSPs because I can still adjust my cash on how I'm going to use it for this stock specifically. So I know I want to buy SoFi, and if I need to adjust anything because the market is just still not cooperating, I can kick the can, still make some money in the meantime. So that's the main thing, is just to be able to have the flexibility to adjust your buying situation. As well as an example I brought up was EOS, or EOSE, however you want to say it. It's a significantly less of a loss when a company drops like that. So EOS dropped 50%, right, on that earnings day or the following day. It dropped 50%. Your CSP, if you wanted to close it and just get out of your position, right, it was about a 25% loss. So it was about half the cost of a loss than if you would have just bought those shares trying to make an earnings play. Instead, you do a CSP, right, on earnings. You're either going to make some money because it went up, and if it goes down, you're just going to get to own some stock. But EOS, for example, is a lying CEO to me. So I personally just closed my position. I took the loss because my whole thesis changed. But it's it's half the loss that I would have taken if I just bought the shares outright to make that play. So, but rolling allows you the flexibility to adjust based on news surrounding the stock or the market as a whole, is why you would roll, just to change your situation.
Yeah, that makes sense.
Yep.
So would it ever make sense to roll, but you're like making less money? Like say you get $2 a premium for the first cash secured put that you sell, but then you roll it like $1.90, so you're losing 10 cents a contract. Would that ever make sense? Or no?
So I normally, so you're talking about like a debit or like paying to do something? Or okay, so yeah, I never roll to a debit. I always want to be a credit. So for this one, I wouldn't do 15, I would do 16. So that way they pay me and I lose and I drop my price down a whole dollar, and then they paid me 50 cents. So I really gained $1.50 here between dropping the price and collecting additional premium. But if I keep this strike, right, and just collect premium, it's $1.11. So you will always better yourself by moving your strike more than worrying about the premium you collect. But the reason I don't pay to change it is because the premium is guaranteed money. Okay. And no one likes the word guaranteed in the stock market, but it's guaranteed. Okay. Like you sign this contract, you're getting paid this money. Okay. What is not guaranteed is the strike price. There's no guaranteed it goes below. Like if you wanted to pay to change it to 14, right? There's no guarantee that it's under 14 for you to get to own it that well, right? This is not guaranteed. So you just paid money to not potentially not even get the stock. So that doesn't make sense to me, right? You want to roll and make sure you're getting paid for the situation, so you're not ever paying for an opportunity that might not even be there. There's a bunch of ifs in the market, right? I don't want to pay for ifs. I want to get paid for an if. So I always roll to a credit, never roll to a debit. Yeah.
Yeah, and so are you doing any roll? This is just for cash secured puts or for covered calls?
Covered calls too. You can do the same thing. If I go to my retirement, I can do the same thing. Here's SoFi, right? I'm currently in this one. I'm currently up. I can roll this position, and I do it all the time. This is a cash account. I don't have margin, so this won't let me show you. But I can do the same thing where I kick this can down the road. And basically, when you do this, let me think of an example here. You set a covered call on, I mean, any stock, I guess. So SoFi, for example, I guess, and then it runs past your stock. Okay. There's a few ways to do it. I wish this would let me show you, but ultimately, right, SoFi, you said I'll sell it. I'll sell it for 19. Okay. SoFi goes to 24, 25. Okay. You're going to want to FOMO. You're going to want to say, oh man, I messed up. There's going to be, you'll run into a moment. The nice part is I can roll this the same way we just said we'll kick that can and not buy the stock for a couple months. I can kick the can and say I won't sell SoFi for a couple more months, and you're going to get paid to roll that out. So I might still sell it for 19, but a couple months later, and they're going to pay me $3 a share in advance, right? To sell it for the same price, but I need to hold the shares and the collateral to that contract. There's two things that are happening. One, again, the premium is guaranteed money, right? You are going to get paid whatever it is, $3 a share to roll this out a month, 2 months out, and that's guaranteed. Now, maybe you didn't get to sell it for 20 or 21, 24, but what you will get to do with that amount of time that you add a month, 2 months further out, SoFi could fall back down below your 19 or 20. And then you get to keep the stock and you kept the additional premium that you rolled out. Okay. You don't have to keep these, by the way, the whole time you sign this contract. I do it constantly. I open them and I close them early. So you can do that. You don't have to keep it till the very end. But we want to roll. I like to personally roll when the stock is above my price because I can collect a guaranteed amount of share price. Let me go back to the other. I don't think I can do it, but let me see. So SoFi here. Okay. I want to sell SoFi. So sell call. May. Again, big red day. I don't recommend selling covered calls because the premiums are going against you. You want green days for covered calls. But for example, right now I could be collecting $1 a share roughly, or 63 cents a share. But if I roll this out further, right, they're going to pay me more in premium because it's most likely going to happen. So this money right now is guaranteed. I can make $1.64 a share. And if I roll it and give myself more time, I can collect more premium, which is guaranteed, where this stock strike price is never guaranteed. Okay. So I always take into account what is my guaranteed money in the situation when I roll, and I'll roll further out. I don't have any good covered calls that are down right now or down because we're obviously going down in the market. So not too much is going to be blown past a strike price at this moment for a covered call to show. But by rolling covered calls, you can collect guaranteed premium and buy yourself more time for the stock to come down to better. I've rolled ASTS, I think 3 or 4 months. I said I would sell it for 75. I said I'd roll it for 85, 95, and then the stock came back down. If we take a look at this chart, I think this moment right here, I said I'd sell ASTS for 95. Okay. And then it was there. I was like, I don't know. Maybe it's going to keep going. And then sure enough, it came down. So I collected for my account roughly, I think was like $11 a share in premium during this roll. And then when it came back down to this moment, I was able to close it for 80 or 90% of that total premium. So if I was going to collect, 10,000, I collected 9,000, gave back $1,000 worth of premium just so I can get out of the contract because I was ready for the next run up to happen. So by rolling it, you buy yourself more time for the stock to pull back, get out of it with all your premium pretty much, and then you can do it again on the next run. So there's rolling just buys you time because as we know, stocks don't just go straight up. They will come back. Just need to give it a little bit more time by kicking that can down the road, and you'll better your situation. Hopefully that answered your question. I think I got sidetracked, but.
No, that makes sense. Yeah.
Okay.
Sure.
Let's see.
Why don't we go through some of these questions at the top?
Yep.
And work our way down. So,
Yep.
Louis asking about, I think this is about the SoFi example.
Okay.
So you keep the 52 cents share no matter if it's above or below $14, or do you only get the 52 cents per share if it's above $14?
You get it no matter what. The premium you sign up for is the premium you get. And the second you sign that contract, they put that money in your account. So, for example, if SoFi, okay, if I did these April 17th, okay, and did the 14 and, I don't know, did 1 or 2 contracts, okay, they're going to deposit the $102 into your account the second you sign this contract. Okay, now you can use that $102 for whatever you want, but no matter what, you get these $102. Okay. If you wanted to, like, let's say, for example, if Monday was super green and Friday you sign this contract, okay, this premium will go the opposite way. It'll go down. So this would go to, like, we'll just say an example, 30 cents. You could close that premium, okay, and you got it for 50 cents. I'm just going to use whole numbers. Okay, you got it for 50 cents. The stock went up the next day, and now the premium is 30 cents. You could close this contract right here and give back 30 cents a premium, and you get to keep that 20 cents difference. This is the part where I was saying you don't have to hold it to the very end. You can swing trade these things. So that's what I've been doing. If you take a look, this is a spreadsheet here. Okay, on average, I go into these trades thinking, I could make 10.78% return on my capital every 35 days, which is 123% annual return if I do this consistently 35 days, every 35 days. But on average, I actually hold these 7 days and I close them early for 3.36% return, which actually annualized is higher, but it requires more activity. But if I didn't want to be as active, I can just stick with how I'm entering these and make this. Okay. So I close them constantly. You can see right here 1 day, 1 day, 1 day, 3 day, 2 day, right? With this chop market, you could Friday, right? Big red day, you set a CSP over the weekend. They go, war's over, boom, Monday rally. And then you could close it the next day for 50% of all of your premium in 1 day instead of waiting 35 days to get the rest. So you can close early, but no matter what, you get the premium that you signed the contract for as long as you hold it, the total amount, as long as you hold it till the end of the expiration date.
Okay, I think that makes sense. And then his follow-up question was, does this strategy work on more stable stocks such as Visa or SPGI, or does it give better returns on high growth names due to volatility?
So yeah, so implied volatility is a big factor. So depending on how volatile the company is, the higher the premiums are going to be. So a lot of wheel strategists that I guess they do it a lot with Ford or simple companies like you said, like Visa and those, like they do it with those, but your premiums aren't as high. They're looking for more of like a monthly 2% return is like the basic wheel strategy. But we're looking to truly still grow significant amounts as far as like the growth side of getting assigned. So I use this strategy as a tool to just own these hyper growth companies that I prefer to own in the long term, but I want to get paid to buy the stock. I don't want to just, buy the shares and then wait for the company to go up. But overall, you can do it with any company. You still want it to have a good amount of volume. Like an example would be, I'm trying to think of a, a bad company. I guess SATL doesn't have a whole lot of premium because it's such a small market cap and there's not a whole lot of options activity happening on it. So like that would be a company I'm not too like here. You either have to buy it for 6 or 5, and if you try to buy it for 4, it's nothing. It's not worth doing it. It's 11 delta. Or you can basically buy it for 5 and get 38. So it's just not a huge like wheeling stock. So you still want to have some good, I would say like the mid cap range of companies and higher. People like to wheel, like the big one last year was Palantir. Nvidia's a constant one. I would say Microsoft, like those companies, Mag 7s obviously takes a lot of capital, so I don't do them. But I'm sticking with like companies that I believe in long term that are like Iren, Cypher, SoFi. I did one on PGY, closed that on Thursday. So yeah, you can really do it with almost any company. The safer the company, the less premium you will make percentage wise. For example, like Ford, I would show you because I think a lot of people do it with Ford because Ford doesn't do a whole lot of bouncing. It kind of just stays pretty consistent in the range. I think it's 11 to 15. But you can see this implied volatility is like 40s. And that's like close date. If I go to April 17th, yeah, 38. So I personally like 60 and above is what I like implied volatility for. Pays a juicy enough premium.
Okay. Louis, that would be Ondas would be a good one for you to
Yep.
run this on.
I've done. I can pull it up, I think.
If you're trying to do Visa, what's Visa right now? Like $300 a share. You need 100 shares for one contract. That's
Yeah.
30 grand US.
So here's ONDS for me. Like I've bought and sold fairly quickly because this thing, right, like it moves really quick. Like as far as, so here's like one day. I opened it for $1.16 and then I closed it for 92 cents in one day. And then the following day I opened the same, I had the same contract. So I closed it for 92 cents and then I opened it for 108 cents. So I got paid again. 2 days later, I closed it for 87 cents. So I bought and closed ONDS many times and I've made, $1,600 and I've never even bought the stock yet. Well, on this wheel strategy, on this one. I haven't bought the stock yet, but I made $1,600 trying to buy the stock. So there's ways to make money without even having to truly buy companies.
Awesome. Okay, so next question. Ritz Grover says, could you please explain when do we sell puts and sell calls?
Yep. So right here, you're going to use this Bollinger Band, okay, on your chart. When you come down to this bottom half of the band, this depends on the color, but either way, bottom band, when you get to here, you want to sell cash secured puts. When you get to the top part of the band is when you want to start selling covered calls. You want the RSI to be towards the top, and you want for covered calls. And cash secured puts, you want the RSI at the bottom. Okay. And you want the MACD, same thing, bottom kind of when you're doing CSPs and towards the top when you're doing covered calls. Okay. That's the simple way. And then having moving averages is good, right? I have a 200-day and a 50-day. So I can understand, like, okay, this is the 50-day moving average. And then this is at the bottom of the band for ASTS, but the 200-day is 70. So I want to be looking somewhere between this bottom band and the 200-day moving average to kind of figure out where my strike is, right? We talked about the 30 delta as well. So, but we're at the bottom of the band. So we do a CSP now and we try to go to a 30 delta, see if it's close to the 200-day moving average. So ASTS, and I'll just go to it just so we can kind of show you. So ASTS, okay. Trade options. I'm going to sell a put. Each brokerage is different how they display it. Robinhood's is the easiest. And I want to see where that 30 delta puts us. And 27 delta lands us right on $70. Okay, where does our chart say? The 200-day moving average is $70. Okay, so my goal would be to buy it for $70. Okay, but I want to buy it if it's only below 70. And in order to get this, okay, or to get assigned these shares on April 17th, the stock needs to be below 70. And to sign this contract, they're going to pay me $4 a share. Okay, which is more than 5%. Right? I can plug it into the calculator too. But I guess it's probably easier on the WAP. I have a CSP calculator. So stock price currently is $78.60. Strike price 70. Premium was 408. And how many days? 19 days. Okay. So cash required to make this trade is 7,000 because 100 shares at 70. Your profit or premium is $408, which is a 5.83% return on your capital. So no matter what, on your capital, you're going to get paid 5.83% return on your capital just to buy the stock for $70, which is what you want to buy the stock for anyway. Okay.
So essentially, if you're, like you said earlier, right, if you're looking to buy a certain stock at a certain price,
right,
you might place a cash secured put to make that premium right off the bat. Then if you get assigned shares, your average price already comes down because you got that premium.
Correct. Yeah. Now your break even or cost of owning that stock really is $65.92. So if you, whatever reason, decided, oh my gosh, ASTS, I don't want to own them anymore, and you just want to get out at break even, okay, you just need to sell it for $65.92 to be at break even. Okay. And just make $0 on the whole transaction. Okay. So, yeah, correct.
That makes sense. All right. So next question. Nian says, why do you choose 30 delta instead of 7 delta for cash secured put? If we can do 7 delta cash secured put 4 times, don't we make more money, even though it's a bit riskier?
Okay, so yeah, he's talking to 7 DTE, days till expiration. So weekly, he's talking about weekly expiration dates.
Okay.
So, yes, okay. This is the simplest answer I can give you. Do I believe that you, okay, can be right 52 times a year, or do I think you can be right 12 times a year? Right? Because if I'm doing it monthly, I only need to be right 12 times. But if you're doing it weekly, you need to be right 52 times. Okay? So it gets, yes, your premiums, you can make a lot more if you're right 52 times doing it weekly, but you can get stuck a lot faster in that scenario because you don't have as much time to adjust what a stock is doing based on that. But yes, if you are right more, right, every week, if you're right every week, you will make more premium, but you have to be right every week. So that's why I don't do it. I want more time. For most investors, right? We're all working, we have jobs. So I don't want to have to manage it as often. I want to be able to set it and make my monthly income, right? Every time I sign this. So, for example, if I was to do this right now, I would probably be looking for myself. If I April 17th is kind of getting close. So I'm kind of looking at May 15th for my next set of contracts. Um, so really, I could buy it for 70, okay? And they're going to pay me $8 a share. That is more than 10%, okay? More than 10% return on my capital. And I don't like, I'm just thinking monthly income for myself to live, right? And there's $800. Guess what? That covers my car payment, that covers my groceries for the month, and I don't have to try to manage a position for 45 days instead of trying to be right 4 different separate times to make that happen. So when you have more time and don't want to have to manage as much, you stick with the monthly time frames, 45 days or less. But like I said, if you want to be right 52 times versus 12 times, and you will make more if you're right, that and doing weeklies.
Yeah, that makes sense.
Yep.
That's a good explanation. Okay, so before we get to this next question, Colby, why don't we go over what we got offered, and then we can get into some more questions as well. So, just to kind of put this out there for you guys, me and Colby have been, uh, we've been working with each other for a little bit now, and I decided to, basically, I paid for his subscription for his WAP, um, and everything that he has to offer, and I used it for about a week, and then I sent him another message and said, Colby, I need to be an ambassador for what you do because he provides I mean, you guys can tell already, like, he knows what he's talking about. He provides a ton of value, and the cost of what he charges is very minimal for how much money I think this stuff is going to help me make over the long term. So I decided to partner up with Colby, and we do have like an ambassadorship type of deal that we're going to just run over really quick, to kind of explain everything that is offered in this deal. There's also a code that I'll send. I'll put all this stuff in the chat for the link and the code if you guys want to just look into it a little bit further. Um, so essentially, Colby, I'll let you take the floor from here.
Okay.
To kind of just give everyone out of what is offered.
Yeah, I'm gonna make it quick. I'm not. I did sales for 8 years, and I'm not a salesperson. I'm just like kill them with kindness, and hopefully you guys want to support. But everyone has their own opinions, and I'm gonna let you have those. I'm not gonna pressure anybody into anything. But yeah, so my community, as far as chill investing goes, is pretty laid back. We have a Discord as well. But the main value, I believe, comes into our indicators that you have access to. And I'll go over all of it. But inside of our WAP, you'll have the wheel strategy log, which you get to use on your WAP. And then you're going to have all your trading view indicators as well, which are going to be all listed right here. Spreadsheet, which is for the wheel strategy, which is the one that you just saw, for tracking your wheel strategy, and seeing kind of where you can generate income and everything like that, and how much you're generating monthly. Oh, that's music. And then as well as a full course on wheel strategy. So you're going to get all that stuff. And then the main value, like I said, comes through indicators. So I'm going to go to the simple version, and back testing. Where is that one? Community. Here we go. Alrighty. And I'm going to pull up probably the most popular one that we just had happen, okay, which is SATL. Okay, we just had our indicator go off, and basically this is two indicators built. We just use mainly two indicators, and they have 15 or 17 indicators in the two. So TradingView charges you guys for using more than two indicators. And that's what I was pulling up on there, is that TradingView, if you want to use more than two indicators, you got to pay $15 a month minimum, to use 5 indicators. Okay. And then to use 10 indicators, you need to pay $35. Okay. There's a few indicators out there, but there's nothing, I believe, like ours that offers the amount of indicators built into two. Okay. So we have labels for trimming and buying. Diamonds are bullish momentum. So you would add, and then we're off to the races, 130% in 4 days, which was awesome. You have support resistance levels automatically charting for you, so you don't have to do them yourself. If I go to SoFi, for example, and go to our weekly time frame, okay, there you go. We got resistance up here. We've lost support. Looks like we have another support in our moving averages. So this helps us really understand when we should be buying, when we should be selling, and not chasing companies. We want to be buying them right. So why are we waiting on SoFi for me to like outright, if I do outright buy shares? I'm waiting for this diamond to populate. Okay. So it does a lot of technical analysis for you, which is a huge value, because a lot of people, like, I can upload any chart within seconds and look at it and understand whether or not I should be buying it, or if I should be selling it, or what I should be doing. So quickly being able to look at a chart and not spend hours to analyze exactly, what is the company doing, where is it going? I can look at the chart and pretty quickly say, we're going to fall a little bit more. I've been telling the community that we're not buying ASTS until it goes a little bit more down, right? Like, we're not here for that. Same thing goes for HIMS, right? If you wanted to miss that huge downfall that HIMS just had, right? We got sells and we haven't had a buy until most recently. Okay. So same thing. We just stay patient, buy at good values. The last time we actually got a diamond on HIMS was back in 2023. Okay, now we have that same opportunity presenting itself. So the indicators alone, I believe, are where the huge value come into play. Huge back testing, very promising. I'm sure I can pull up a few if you want me to, Trevor. And then inside of Discord, I don't know if you want me to show that part, Trevor, or not. I can or not. Okay. Inside of Discord, guys, you are going to have, with the full membership, and with Trevor's code and everything, it's even a bigger deal. Standard community stuff. We do 2 live streams a week. You do have classroom stuff, so if you want to learn more, our little cheat sheet note cards for like wheel strategy and when to do it. Do you want to own the stock? Is it at the bottom half of the band? Is it a red day? If you answered yes on all of those, go ahead and do a cash secured put. Okay. Same thing, how to find your strike price, bottom of the band, 30 delta, expiration date, and the return we're looking for. Okay. So there's all these cheat sheets, stop losses, Fibonacci's, gaps, wash sales. And then we also upload all of our charts in here. If you guys had questions on specific charts, you guys can go in here. I post all my trades, but the main thing that you also benefit from is our bots, which is the same thing right here when I said SAT-L 328 on the daily time frame, bullish momentum. Okay, so there's 900 stocks we're watching constantly, and these go off when the candle closes. So at the end of the day, each daily one will trigger. At the end of the week on Friday, when we go into the weekend, you're going to see the weekly. At the end of the month, you're going to see all the monthly bullish and bearish bots triggering. Okay, and we also have a fun one where a purple populates, a purple candle. It means get the heck out of Dodge. Do not continue to hold this company. Okay. So here's your NVO notice. Go ahead and sell everything you got. And now we're waiting for that opportunity to buy again on the monthly time frame. Okay. Happens with ONDS. It's happened with IREN. I mean, can name it. There's purple candles, but when they happen, we get the heck out of them. Another opportunity will present themselves. So to keep it nice and short, that's as much as I'll go into it. If there's more that Trevor wants me to talk on, I can talk on it. But I think that's a quick little rundown of it all.
You get access to all the sheets and stuff, all the spreadsheets
Yep.
that you have for your covered calls and all that stuff.
Yep. You get access to the wheel log. So basically, what I do is when I log, like I did a cipher, I did a CSP $14, April 17th, 10 contracts. I get $1.20 per contract, and so I get to track each of these wheel logs or each of these data points for each stock. And what happens is they get put on the sheet. So when I want to see how my SoFi wheel is going, okay, I can look. Here they all are. Here's all my premium. Okay, so my average cost basis of just owning stock is 1109. With all the premium I've collected, my cost basis is actually 969. So I can track all my wheel profit is 7,000, my strike profit, and stock profit and everything like that all into one sheet, which is really nice. If you want the more basic version, which is perfectly fine, and get to use it on your phone in an app, inside the WAP app, you will have a log as well, but it's just like a generic log. It logs each transaction but doesn't like categorize it by the stock or the ticker. It just does the generic tracker, but you would have access to that. So you have complete access. The deal that is being ran is considered the Founders Club. Those that support the community early on, like Trevor, is $20 a month. With Trevor's code, you get 25% off the first month as well. And the indicators alone, like I was saying, cover. You don't need a TradingView subscription. You don't need to pay this because our indicators have 17 indicators built into 2, which is what you just need. 2 indicators is the cap for free version. So you don't end up having to pay this. You get all the indicators, all the bots. We have another analyst that gives trades. He just did actually 1,000% return on a SPY option last week on a day trade. So that was awesome. But yeah, you gain access to all of that stuff as well.
Yeah. So guys, we'll get back to some questions, but before we just kind of wrap it up here, I've been running this community since August of 2024, and I've never really, pushed or been an ambassador for anything. I've had a lot of people reach out to me with different opportunities to say, hey, you have X amount of people in your community, try to sell this, you get a commission. And I've never gone down that path because I didn't, I didn't want to screw people over. I didn't know what I was getting myself into. I paid for Colby stuff personally, and I'm the first ambassador of his community. I told him, like, I want people in my community to get this opportunity because I use it personally and I think it's extremely valuable. So I know I just wanted to get it out there for you guys. Let make sure you guys were informed and you know what's available for you. If you don't want to go ahead with it, that's totally fine. Just figured I would, kind of talk about it. We also have, I think if I'm not mistaken, the $20 a month deal ends tonight and it jumps to $50 a month after 11:59 p.m. If you do use my code, you save 25% off for the first month. So if you're kind of on the fence, you could use my code and it's $15 for month one. You could go through everything, download the indicators, use it for a month. And if you aren't a fan, you don't think it's valuable enough, then you can just cancel and call it a day. But I'm an advocate for it because I use it personally and I think it's extremely valuable. It helps me with my technical analysis skills and just becoming a better investor. But it also helps me with being more patient and being more efficient with my buys and trims and adds and sells for stocks that I plan on holding for the long term. So I did send the link and the code in the chat. I will pin that message. And if you have any other questions after the call or during the call, feel free to send me or Colby messages personally. But as of now, let's get back to the next question. So Colby, Raj says, what is the full risk-adjusted return of this strategy compared with simply buying high-quality stocks and holding them over the same period? How would the wheel strategy compare against a buy and hold plus selective trim approach in terms of total return, drawdowns, capital tied up, and missed upside?
Yeah. So, okay, it's a common question. Buy and hold. Well, you feel your pain currently right now with your buy and hold thesis and strategy, right? If you could time the top of everything and time the bottom of everything, nothing's going to beat that strategy, but that's usually not the case. Okay, let me go to here. Um, so the wheel and how I use it, like ASTS, when it got to 117, I didn't run a covered call. I sold it. Okay. Why? Because our indicator told us to. But there's money to be made in between that time frame, right? There's plenty of money of consolidation, where companies just bounce up and down. Like for example, how many of you are in Oscar right now? Like you guys don't have to answer, but I'm assuming a good chunk of people, right? X was all about it. Look, I mean, buy and hold Oscar. Let me just pull it up here. All right, let me go to the wheel one. Right? There's a this is a lot of bouncing happening right here, where if you timed all these tops and bottoms, sure. But if you bought and just held through all of this for since February of 2024, then you are flat or negative. One or the other, right? Like right now for the past year. But we've been selling covered calls and cash secured puts and covered calls, the whole bouncing. So I mean, obviously during a bull run like last year, I didn't do too many covered calls, but I did do CSPs to try to buy things for cheaper just because we were constantly running. So the wheel strategy doesn't have to take place all the time, but like right now with the potential of like market dropping a little bit more, being at these levels, the goal is to buy and get paid to buy something, considering that we're not really in a bull run right this second. Now covered calls, okay, I look for, I'm going to go back to ASTS because there's many times where this happened. Okay. We hit this band. I sold the covered call. Dropped. I closed it. Sold the covered call. Closed it. Okay. And then we had this run up happen and we have targets and everything. But when the company's not super overvalued, I'm doing more covered calls. Now, when we get to these points where these little, high points are, you can sell. But I would say that right now your buy and hold thesis, right, of just holding through a downtrend while I'm generating and selling calls against these things so I can make money. It's like the safest way of placing a put on the market. I would say overall return, I guess, is always going to come up to what stock you picked, right? It's not going to be the most consistent between every company. But to be able to make the stock gain, the strike price, and to make premium, which allows me my flexibility of income and to go about life without stressing. Um, right? Like SoFi, for example, I'm getting paid to buy the stock, and I don't need to stress because I just by buying the stock they paid me some money, and now I get to use that money to live. So it depends where your principles are. If you're working a job right now and you're making probably 200,000 or 300,000 a year, you probably don't care about making a couple $100 in premium or $1,000 in premium. You might not, and you don't want to manage it, and you just want to buy and hold, right? It's not for everybody, but to make good premium and income, to sign, like everyone says, I'll sell it if it gets to this price. Well, again, sign a contract, get paid to sell it for the price you want to sell it for, right? So it just kind of comes down to it. I still think that the wheel strategy, does outperform because right now, like I kind of just base it against the SPY, right? If the S&P 500 on average is a return of 12%, right? Well, we are trying to generate at least 3 to 5% a month in premium. So I can beat the SPY every year in a matter of 3 months. So I guess it just depends on what you're trying to beat out. I guess if you're doing the SPY comparison, or if you're trying to pick, like you picked ONDS at 50 cents. Yeah, if you picked ONDS at 50 cents and it's $10, yeah, okay, it's probably not going to beat that one. So kind of just depends on what you're comparing it to, for sure.
Awesome. Okay. GS, I replied to your comment. I'm not exactly sure what you mean by this question. So if you answer and clarify, then we'll get to it. Evan says, when selling a cash secured put, the premium increases as the stock price decreases. Same with covered calls. As price increases, so does the premium. Just want to make sure I'm understanding.
Yep. So cash secured puts, we're going to start with that one. The premiums get better when the stock goes down. Okay. But when you sign your contract, you locked in that premium. Your premium does not get better after you sign your contract. Whatever you signed your contract for is what you're going to get paid. You can't make more or less. Covered call, the premiums get better when the stock goes up. Again, it doesn't get better if you already signed your contract because that's what premium you've signed up for. But if you are trying to wait for like ASTS right now, on that big red day, it's not a day to do covered calls. Big red day is a day to do CSPs. When we have a big green day and we get to the top of this band, that's when you want to start doing some covered calls. Because the premiums get better for covered calls on big green days, top of the band, and big red days for CSPs. But whatever you sign the contract for is what you are set to get.
Awesome. Pat says, would you share the spreadsheets to record the wheel trades? Yes, Pat. The spreadsheets are included in the offer that I sent in that link there in the chat. What else do we got? Braden says, is it best to run the wheel in times like this? Are you not holding much for the long term right now?
Everything I do for my strategy is always long term. Right now, because things are so undervalued, my goal is mainly to just accumulate at this time. And I'm not too worried about the covered call side at this moment. Just because we know the second he puts out a tweet, I mean, just not to get too much into the macros of everything, but the second the tweet goes out or anything that the war is over, right? We've seen what a few green days can look like with just the thought of that happening. And what will actually happen when that ends could be a monster run. So I don't want to right now set myself up to set covered calls unless it's in like my tax-free accounts, like my retirements and everything like that. I don't mind it because I'm not paying taxes on that transaction. And I can just it's a retirement account. I can't touch that money for 30 years and stuff like that. So I'm willing to do it in those accounts, but my other brokerage accounts I'm not willing to do so. But yeah, everything I have is long term. I don't really do too much of like the trading mindset of short term targets. But I'm mainly, and if you are short term, then you could do the weekly stuff. But long term, I'm just trying to collect as much premium and buy these stocks at the best value I can. And then anytime we do get those monster green days, I am doing the covered calls. But I need it to be kind of a monster green day. I want to see something considered overvalued, which helps with our indicator, by the way. That helps significantly because a lot of people will say, should I buy this company? And I'm like, the company is now entering overvalued zone. So we're actually looking to try to sell some of this company, not buy this company.
Yeah. Yeah, and I think that's one of the most valuable things that, I'm using these indicators for. Like, obviously you can look at a stock and say, okay, they're growing earnings at 30% and they got a 20 PE ratio.
Mm-hmm.
It's attractive. But, taking that to the next step is saying, okay, I've researched the business. It's got a good, the fundamental story is there, a good opportunity for the long term. They got a good management team. I
Right.
want to be invested long term. That's step one. Step one is realizing and doing the work, saying, okay, I really want to own this company. Step two is going on to the charts and figuring out where the best time to actually enter is. And I think that's something that, I've been working on and I've been wanting to improve with. And I think these indicators help me out a lot with that. For sure. Like I would have been doing a lot more trimming back in October, November. Like Colby, if you pull up SPY, I believe there was like 3 or 4 diamonds back in like October, November.
Mm-hmm.
And I was taking a little bit of profits back then. I sold a little bit of Palantir. I sold some Google at like 330. But if you're seeing those diamonds and you're seeing momentum starting to draw down and go flip negative, then you might look at the chart and say, okay, it's time to take a little bit of risk off the table. I'm going to take profits on my high beta, high risk
Yep.
stocks that I've already profited a decent amount on.
November 17th was the crossover of the MACD and diamonds. So probably that would have been like the actual confirmation. Somewhere right here at the 683 mark kind of would have been the time. Yeah.
Yeah. So I think that's personally why, obviously this is a long-term investing community. I say time and time again, my main focus is on the long term. But there are still ways to be more efficient with your whenever you're getting into positions or out of positions when looking at the charts and actually using, indicators to essentially use facts and actually like what's going on in the charts rather than using your emotions and say, okay, stock's up 100%, I'm gonna sell it, take profit. If you look at the chart, it's up 100%, but it's still, it doesn't look overbought, then it might be smarter to just continue to hold and wait to get some indicators near the top of the chart.
Yeah.
Um,
Because this is the part where the color coding, like how many people probably in the market, not in this community, but people in the market that have no clue what's going on and they just see that SAT-L is up 100% and they're like, oh my gosh, because everyone's going to be super bullish. They're all like, oh, we need to get in. We need to buy. It could go up more, right? It's on a big run. Well, this is telling you like, hey, we're entering the selling zone now. You should probably not even think about buying this thing. So this is stopping you from losing money by getting into a company late, as well as it's trying to help you find good entry points to dollar cost average into. So
yeah, for sure.
Don't go chasing.
Exactly. All right, next question from Louis. Oh, he's gone. He says, does this work on stocks in constant downfall, such as Duolingo or something like Beyond Meat?
I think Beyond Meat is too cheap of a stock, I think, to do really the wheel strategy. For me, too, I think Duolingo, let's see. We can go to it. I know a lot of people are bullish on this company. I haven't done any research. Oh my God. I haven't done any research into it. Well, obviously, it's going to depend where you bought into this company. How long has this been IPO? 2021. Sorry, I really don't pay attention to this company because when it gets to a company like expensive like this, I'm not doing the wheel strategy, right? Like it's just too expensive to buy contracts. So I guess you'd have to have a good size portfolio to be running the wheel on a company of this price then. But I would say the wheel strategy, right? Just remember this: the simple terms of a wheel strategy is you are buying and selling a stock for a price that you want to own and a price you want to sell things for. So we can take a look and see what that spread looks like, but it's no different than if you just bought Duolingo at $300, right? But instead of just buying it for $300, you got paid to buy it for that price. But the scenarios are all the same, right? Buying and holding, buying and selling, it's all the same.
It would just soften the blow a little bit.
Correct, yeah. So instead of saying I'll buy it for, where is it? 30 delta. Oh, that's sell puts. So you'd be saying right now I'd be buying it for like 92 to 91, and your break even at 92 would be about 90. So you'd soften your blow a little bit because you made this money. You would have to give it back, obviously, but you soften your blow. And depending on the time frame of how fast it dropped at that time, on when your expiration date came, maybe it wasn't even below that. You didn't even get the shares, right? In that free fall moment, maybe during that time period, it bounced a little. And you could have rolled and you could have bettered your situation, right? This is the point where I say, like, I can kick this can all the way down to January 2028, lower my strike as low as I possibly can, and I got to wait for it, but I won't take the loss on it. I'll, better my situation. Maybe in that time frame, the company rebounds. There's a lot that can happen. If it's a long-term thing, then you can better your situation. So that's the rolling aspect of it.
Yeah, for sure. Pat says, do you really want to own long-term Beyond Meat losing money? Well, I think what your question is kind of asking, I don't know if this is answering it, but like Colby said earlier, you're not going to run the wheel strategy on a stock that you don't want to own for the long term because of that chance that if you do get assigned, now you have 100 shares of a company that you don't actually want to own. right? So
Yep.
these strategies only are useful for, like, you could use Pagaya, for example, right? I'm interested in buying Pagaya and owning Pagaya for the long term. If I wasn't interested in buying and owning Pagaya for the long term, I'm not going to run any sort of wheel strategy on this company.
So right now you could do Pagaya and say, I want to buy it for $10, and they're going to pay you 5% in premium, 53 cents. And you're going to make 5% in 19 days. If it's no matter what, obviously you get the premium. But there's a chance you either get to own it for that $10 or you don't own it for $10, you know? But no matter what, you're going to make 5% on your capital.
Yeah, and so if Pagaya is above $10 come the close of April 17th, then you just get the premium and you don't have to buy the shares, correct?
Correct.
Okay. Oh, good question from Jay here. Jay says, thoughts on ETFs that buy the index but sell call options, JEPI, JEPQ, for example. If we don't necessarily play with margin and have enough money for 100 contracts, and find you want to play banker in a way on sideways movement as a whole. What do you think about like covered call ETFs?
Yep. And I think Trevor knows I brought this up in his ETF chat room. And the big thing people always are worried about is NAV erosion, right? And there's a few out there that don't. JEPI and JEPQ are good, but I wouldn't use them in a tax account. They are not the most tax efficient income ETFs. And I'm starting to implement part of my strategy is, if I generate $1,000 in premium in a month, I'm thinking, do I want? This is currently going through my mind. I haven't decided yet. Do I want to put 10% of that premium into these income ETFs so that way I have some sort of premium every month that I don't have to think about generating, right? Where it's just consistently coming. They pay monthly. So personally, I like them. Now, JEPQ and JEPI are good ones. SPY-I and QQQI are, I think, better ones, just because of the tax advantage that they provide. I'm not a tax consultant or anything like that, but just through my research, I've realized that QQQI and SPY-I are more tax efficient in a taxable account. If you're doing a tax-free account, then you can do JEPI and JEPQ, and it doesn't matter. There's another one, GPIQ, which is dividend and growth, and no NAV erosion by any means. It actually has an average return of about 5% on your your cash that you put into it, and then it's about a 10% dividend, which is what kind of JEPI and JEPQ provides. So GPIQ, it would be my one if you want growth and a monthly dividend. If you just want dividend, then I like the SPY-I and QQQI. Those are my two. But yeah, I think those are great to generate some monthly income. I personally like to drip it when like the markets are up and going. I prefer to drip. If the markets are down, I actually prefer to use that dividend to buy cheaper individual stocks. So that's how I like to do it.
Interesting. Okay. I don't see. And does anybody have any more questions they want to fire away?
I see Evan has one real quick.
What did Evan say?
Are the Bollinger Bands included in the chill indicators? Yes. They are included inside of here in your Chill Master Elite. If you go here, there is a Bollinger Bands. So show Bollinger Bands, because the reason I put that obviously is with 2 indicators being allowed on your free version, you wouldn't be allowed to use a Bollinger Band on top of our 2 indicators. So I built it into this one, as well as all the moving averages. So that way you wouldn't have to use 5 moving averages and have to upgrade your trading view. So you shouldn't need any other indicators by any means. So, and this momentum one is 3 different momentums built into one. So, same thing.
Fantastic. All right, I see Raj is typing. If anybody has any more questions, send them in the chat.
Fire them. Fire them away.
Yeah. Actually, I do have a question.
Go for it.
Colby, do you want to Do you want to go over the? I know I texted you this personally, but go over the bull and bear line,
Oh yeah.
the 200 to moving of 50, and then talk about why you use the daily and the weekly if it's under or above.
Okay. Yeah. Perfect example actually is hymns. So we'll use hymns. And I'm going to remove the support resistance just so we can get this to be just cleaner to look at. Get rid of the Bollinger Bands, get rid of those. Bull bear line. Okay. Sorry. Just want to make it as clear so we don't get too distracted with other things. Okay. So for my strategy, specifically using the indicator, this blue line is what we call the bull bear line. And when we are above this line, I follow the daily time frame. When we are below this line, we use the weekly time frame. This blue line is a 200-day simple moving average. Okay, that's what the orange one is also. But the blue one has a 50-day simple moving average offset. And the reason we put that offset on there is because market makers, right, are trying to find where everyone has a stop loss. And where everyone has a stop loss is exactly where they want to drop the stock down to, take your shares, and then send that stock right back up, right? They want to liquidate as many retail investors for losses and then send it up so big money institutions can, get the gains on it. So what we do is we make a slight offset, which helps us because you can see we dropped right below this 200 SMA and freaking grabbed all these people's shares. All these people got liquidated because people put 200-day stop losses all the time. And what we do is a slight offset. Now, the slight offset's not always going to be perfect, but when I've back tested and looked, this has been the most consistent offset of that 200-day. So when we're on here on this daily time frame, we stay and follow the diamonds. And these are all dollar cost average. One diamond is not the buy everything diamond, okay? But these are good diamonds to dollar cost average. Now, I typically also ignore gray zones because it's not undervalued and it's not overvalued. So, and I want to take advantage of more gray or deeper buying opportunities. Okay. Light green zones, right? You're getting kind of undervalued. So you can place CSPs in this zone, right? If you're super bullish, you can buy. But again, you got to kind of read the room a little, right? You understand there's a war going on and everything. So like you have outside perspective on what's going on for a company itself. So you might want to do a CSP here or buy some. But again, dollar cost average, I typically on like helping people understand, I kind of trigger yellow and orange diamonds to be 10%. So yellow is a 10% add. So if I was going to buy $10,000 worth of hymns, I'm going to buy $1,000 here. And then my green diamonds are about 25% of whatever remaining cash is left. So if I have 9,000 left, I'm going to do 25% of my 9,000. And it's up to you if you want to double down when the stock is the same price. So if you bought currently at 27 and this gives you another buy at 27, well, that's up to you. Do you want to buy again for the same price? That's up to you, right? I can't coach you through it all, but if you don't think buying again at the same price you just bought at a couple days ago is worth it, then don't do it. But then again, red is a 25% sell is kind of how I teach it, 10% on the orange ones. So then we get another buy, trim, and then we cross this blue line. So what do? We switch to the weekly. Why? Because the daily time frame, once it crosses below basically the 200-day, the company is undervalued, right? Any company below the 200-day is considered an undervalued stock, and you'll get a lot more triggers on the daily time frame. So we switch to the weekly, and now we don't get any diamonds until we get to here. Okay, so now this would be your first buy based on the weekly time frame, and then you can do it. So a good example I like to use is Microsoft also for this strategy is because when we cross below, like in a bear market right here, we cross below this blue line. This is still above it. We only had one opportunity, two opportunities to buy based on the weekly time frame. So you would have only bought twice, and then we're back into a bull market. And then we bought once down here. which would have been your April moment. And then we have our sell up here. And now we're waiting on another buy opportunity on Microsoft. Okay. So this is where we can be patient, and all you got to do is wait for the diamond, guys. If you don't want to have to think about your companies, all you have to do is like at the end of your day when you're going to bed, pull it up and see if a diamond populated. If a diamond didn't populate, guess what? Go back to sleep. There's nothing to do, right? So you can do it a super lazy way, which is just wait for diamonds to populate, and then there's an opportunity to be made. But really, there's nothing to do in the meantime while we're waiting. So there's no reason for me to look at Microsoft and think about buying it until I see a diamond generate. So, yeah, generational opportunities tend to happen with Microsoft under that blue line as well. Doesn't happen very often, but when it does, they become amazing opportunities. So same thing goes with Meta right now, is in the same boat. So that's the blue.
Can you pull up Meta real quick?
Yeah. Okay. There's your Meta. And same thing. Under blue line, here's your buys. Okay. We had our trims up here. Got a buy. You got a big spike, which I think was earnings, right? Yeah, we had a couple guys in our group that set covered calls on earnings for like $800, and they made, I don't know, a good couple, like 11 grand or something. And now they're taking that 11 grand and are waiting for this diamond to generate to put that 11 grand that they made in premium from Meta to buy more Meta. So you can basically, like, I don't know if some of you guys are all into like dividend investing, but if you are into dividend investing, treat generating premium as a dividend. If you can generate, like on my example of my SoFi, right, I made $250. Well, $250 right now divided by the 15, okay, I just bought 16 more shares of SoFi. And I didn't have to do, I only put my like shares up as collateral, and I can buy 16 more shares with that money. So you can use it as a dividend and drip it back into the company that generated that premium for you.
Hey, Colby?
Yep.
Can anybody not hear Colby right now, or is it just me?
I hear you, Trevor. Hello. Just you, Trevor.
I cannot hear a thing. That's hilarious.
Back. Give him a second. Let me go see also January 2026.
There we go.
There you go. So when you got this, by the way, on Meta, we got this right under there, and then we flipped over this blue line. You can go back to this blue line, January 2026, and switch back to that daily time frame. And there's your sell diamond right above the blue line, and then now we're trickling back down. So I like to stay, again, weekly time frame when I'm below this. We get over this blue line, switch back to the daily, you're going to see the sell alerts and everything like that. You don't typically get a weekly any sell alerts too much underneath of this line, because when you're really under that line, it should be all about accumulating at the best price and not too interested in selling, because in the long term, we're going to recapture and go above that 200 day, just like this, right? It's all about accumulating the best you can, and then you're going to reap the reward, but it's going to require just a little bit of time, guys. Can you hear Trevor? Trevor.
I'm back. It happened again. I don't know what.
That's weird.
No. Cutting out mid go. I can hear you now though, so we're all good.
All right, good.
Hopefully.
So yeah, I was.
Sorry, keep going.
No, I was just talking about when it flips back over the blue line, switch to the daily time frame, and you'll see the sell alerts come in.
Mm-hmm. Right on, like clockwork.
Mm-hmm.
Hey, Tara says, do you ever buy call options? Quote leaps. She joined late. Not sure if this was
Yeah,
discussed.
so there's a good strategy. So I'm not doing it currently in this market condition because um, I I don't know how much you guys know about Greek options and theta, but theta is the cost of owning options per day. So when the VIX is higher than 25, theta rapidly increases, and it's better to be selling options like we do for the wheel strategy because we collect a juicier premium. But when you buy options, they are more expensive than they normally would be. So part of the strategy, there's a couple ways to run it. You know how, like I was saying, if I generate some premium, I want to put 10% into income ETF. Well, what people will do is they will take, if for example you collected $1,000 in premium from SoFi, what they'll do is they'll take $500 worth of that premium and they'll buy leaps with it. So that way, in case you don't get assigned your shares and the stock decides to rally before you get your shares, you have leaps to capture that upside. So there are ways to do it, and I do buy leaps, but in this current market condition, with the amount that of chop that is going on, I am not buying leaps at this time.
All right. Adam asks, is there any stocks triggering to buy right now?
Can see. Let me see. Let me see. Let me see. I think it was a lot of those like kind of safe haven companies like Costco. I think were triggering. Let's see, like a Pepsi. Um, I can tell you there's a lot of bearish ones. We can go to the next question while I look to see if there's anything good.
Yes, Adam, the call is being recorded. I will, after the call's over, I'll edit it up quick and throw it in the summon folder because I know you missed the first little bit. Heights asking about Microsoft. We just went over Microsoft. Not sure if you were here for it or not. Microsoft is almost looking like. I mean, I think Microsoft's a buy right now, but the indicators are. I believe it's below the 200, and we were in the green buy zone, but we haven't got a weekly buy diamond yet, which is what I'm looking for or waiting for, essentially.
Yeah, we can see momentum is slowly increasing and becoming bullish, but we're gonna wait for this to flick greens like this kind of did, like this time. And once you get that flick of green and you see this crossover happening, it's kind of go time. So we're just waiting on that moment to happen.
Are you still on the meta chart right now, Colby?
This is Microsoft.
My thing might be just glitching like nobody's business today. Unless anybody else is seeing meta charts still. Might just be me.
At least I see the Microsoft one. Is it the green diamonds? Oh, I'm sorry. I don't want to go out of order. Sorry.
I'll be right back. You can answer Adam or Evan's question. I'll be right back.
Okay. All right. So as far as I'm taking a look here, is it green diamonds below and above orange red? Yeah, so green and yellow are our add and buys, and orange and reds are our trims and sells. Greens, I tend to lean in heavier on the greens than the yellows, and the same thing, I trim more with the red and then the orange. Purple is my sell all button. Yeah, just Trevor. Okay. Back on Microsoft.
Ridiculous.
I do not focus on the color of the candles. So, well, I do. The color of our candles. I do not focus on the normal color as far as green and red candles go. So, most of you guys, and I'll spill the secret, guys. I'll spill the secret, okay? The candle coloring on our indicator is based on a company being undervalued and overvalued. Okay, that's all it is. So the same way you guys look at an RSI to understand whether or not a company is right here, right, undervalued, overvalued. So this would probably be a green zone on our candles, and this would turn into orange or red coloring on this. And it just helps you without having to look at an RSI or to know whether or not a company is overvalued or undervalued. We just get to look at what our color coding is and stop focusing so much. Like, I'm trying to zone in on, okay, is the company undervalued? Yes. Okay. And then we get a bullish momentum, meaning that the momentum of the company is trending upwards. Then we go ahead and we, dollar cost average into it because it's usually a good opportunity. Okay. Yeah. So the color candles is just letting you know the company's value, undervalued or overvalued. So as we enter into this green zone, we're entering the buy zone. Now we're waiting for our diamond to confirm that the momentum has shifted bullish for us to dollar cost average into it. But
so the reason
go for it.
that we wait for this momentum shift is because if you look at Microsoft back in like early 2026, where you were getting these green candles, but the momentum is still negative. So sure, it looks like a buy, but if the momentum is still negative, the stock can still continue to go down. The reason we wait for the diamond is like the indicator of, okay, the momentum has shifted from negative to positive with the purple signal line crossing above the MACD line.
Yep.
Is that correct?
Yeah, so you can see right here in last April, okay, we were trending down. This whole MACD was trending down, okay, but you see these like little bullish ones happening. Well, the company wasn't undervalued at this time. It was still above the blue line. So we're on the daily time frame there. Once we drop below this, okay, we are still seeing bearish activity happening. You can see that these are bearish momentums, but they're slowly trickling to be positive. Same way these are slowly trickling to try to get closer and closer to flipping positive. And once this flips positive on April 14th, you can see that the diamond generates. Okay. And then a couple days later, because MACD lags, you can see the bullish crossover happen, which just confirms your overall momentum. And therefore you can, confirm that we are bullish and wait for now to see a bearish kind of crossover happening up here. And then you get bearishness. So then we get some sell diamonds. So the diamond is just confirmation that the momentum has now changed directions. Not so much the candle coloring isn't telling you to buy. The diamond is more the signal to buy. But this candle coloring helps you understand, like here, how many people were buying Microsoft in these like 500 ranges when we're buying it, in the 370s, 380s, and now we're looking to actually exit when these people are thinking or Microsoft is going to run to 700, right? We're not trying to catch this little portion of this move. We want to catch the big portions of the move by making sure we're buying when a company is undervalued, not when it's fairly valued or overvalued or anything like that. We want to set ourselves up for maximum potential. So
Did you
go for
Sarah
it.
asked, are those indicators only based on technical analysis or fundamental analysis as well?
Okay, so the indicators are built off of technical analysis. I can't put anything really. I mean, RSI is a little, I guess, under fundamentals, just based on company's value being undervalued and overvalued. So a little bit of that, but not as far as like if you're referring to reading like earnings or anything like that, or going through their balance sheet. That's not the case. So I can't help you pick stocks, I guess. Like, I'm not investing in a newspaper company right now, right? They're probably not going to win a lot of trades. So
Yeah, for sure.
I was going to say, yeah, the indicators are built off of a lot of momentum. Like, this momentum indicator is 3 different momentums all into one. So you don't have to look at 3 different things. You can just look at one to understand if the overall is bullish or bearish. Color coding is to understand companies how it's being valued, overvalued, or undervalued. And then the diamonds are to tell you whether it's bearish momentum or bullish momentum happening.
Yeah, so essentially what I mentioned earlier and how I'm utilizing this as my strategy is the first thing that I do if I'm looking into a company is fundamental analysis. I'm looking into the financials, the business model, the management team, the TAM, the total addressable market, where I think the sector overall is going to go over the next 3 to 5 years. And if after doing all that research, I like the business, I like the fundamentals of the company, I think it's going to grow, and I want to invest in this company, then the second step is to go onto these indicators and look at the charts and figure out, where the best time is to actually get into the stock. So the first thing you do is fundamental analysis, and then you do the technical analysis to essentially have more efficient entries and exits for the stocks that you want to hold and buy and own for the long term.
Can't stand Zeta. There's your Zeta. Bye.
Trim, and you had a sell back at, what was that, $30?
Yeah,
$33?
23. That's when we got out. 23.75 was my last sale on Zeta, and I haven't gotten back in yet.
What's up, Nick? Nick, your mic's on, bud.
What you eating?
I was messaging you guys in the chat. I was like, oh, these guys.
We're buzzing.
What's going on? I didn't know you guys are live today.
Yeah, we went live at 4 o'clock.
Nice. What's on the menu?
Wheel strategy. We were going over. Yeah.
I see. Well, pretty much, hold on to your bridges, man. I don't know if you guys seen the geopolitical news.
I was looking into it a little bit. I saw that they're deploying like 50,000 troops on the ground in Iran, U.S.ers.
Yeah, I don't know if they're actually going to, but the headline from WAPO was that the Pentagon is discussing that right now, and Trump just had some sort of speech the other night, and he said Cuba's next. He was playing it off like a joke, but he was serious. He said Cuba's next. Media, pretend I didn't say that. Just pretend I didn't say that. And then he went on to kind of like a long pause, and then said, "Yeah, Cuba's next," and then moved on and started talking about other stuff. I'm like, oh, great, like this is fantastic. We're out here just trying to navigate the Iran conflict. You're telling us, you're expanding the theater just south of us. Like, fantastic.
Yeah, it's ridiculous. Who knows?
It's not great for traders. Let's put it that way. I'm not a trader myself, but long-term investors, we just take the opportunity and run.
Yeah, that is for certain.
Got to sell some covered calls, make some money.
That's true.
Yeah. There you go.
I'll mute my mic. I'll let you guys do your thing.
All right. Colby, did you answer Adam's questions there at the bottom?
He just posted that one. So as far as the amount to sell, so obviously this is going to be a personal preference, right? So indicators on a higher time frame mean bigger things. So daily time frame, right? You can do. I like the 10%, 25% trims and buys and ads. Like those, like yellow and orange are 10% signals to me. Green and red are 25% signals, and then purple is 100% signal. But when you get a weekly, right, you want to bump that percentage up significantly because it leads to bigger moves. So when you get this like sell on a weekly time frame, you can see how much of a move that makes. Okay. But on a daily time frame, it just was telling you like this little move. So on our specifically in the community, we have the alerts go out every Friday at close for the weekly one. So you would see your stock with that alert for Friday saying, your weekly bearishness has happened. Friday between 4 and 8, the after hours, you could go ahead and sell or exit more of it before it travels further down over the next couple weeks. So higher time frames, I would follow with a stronger trim or buys than I would on a slower time frame.
Yeah, that makes sense. Do you follow a specific, like if you get an orange diamond, do you sell 10% of your position? Do you follow a specific, or does it depend kind of stock to stock?
So like for example, it depends on how bullish I am, really. On my orange diamond. So like for me, I don't want to hurt anyone's feelings, but I'm not the most bullish person for Zeta. So I just sold Zeta. ASTS, I know I don't want to hurt anybody's feelings.
Fighting words, Colton.
I know, but it was the right move, okay? It was the right move. But for like ASTS on the most recent go around, where is that? There it is. Daily. Okay, so like on these moments for me, I was doing covered calls. One, because it was a gray candle and I don't usually listen to gray candles. So I just was doing covered calls moments. And then when I got up here, I actually full exited because there was like 3 diamonds telling me to full exit. Or like 25%, 25%, 25%, like just get out. Right. And then we saw this bearish cross happening and then we got down here. So yeah. I typically am following the diamonds 10%, but if I believe in a company and I wasn't willing to sell everything of ASTS here, I'm sure as hell not selling everything of ASTS 10% here. I should have just, I would have sold it there, right? I'm not going to do that. So just kind of depends on each scenario, but I'm usually following it in some sort of way as far as a covered call goes and collecting some premium during the downfall or trimming.
Interesting. So Tara says that I'm colorblind. I'd have to use ChatGPT what color is the diamond, unless you can hover over the diamond and tell what it says. I'm not sure if that's.
So you do have access inside of our thing. I don't have a way to. I haven't put it on the master one yet, but I might be able to. I constantly do updates, guys. So if there's a way for me to do it, I will. But there is like when I do the strategy backtesting way, right? It says add and it says buy, so that would be a green diamond versus a yellow, which you have access to this as well to see how the backtesting has done. So that does tell you essentially yellow or green or orange and red because it's trim and sell. So it'll say full exit if it's purple. So there is a way. If I can make it all into one on the Master Elite and maybe figure out how I can turn on and off labels, then we can do that too. I'll work on that. My dad's colorblind, so I should know better.
Yeah. Nick wants to see some charts. He wants to see. Actually, first off, Adam said, "Are you looking to buy back into Zeta on the next green diamond?"
I have to be. I know, right? Why are you trying to call me out right now? I am probably not, but that's not because it's not Zeta, it's me. Okay. I'm down to my 10%, my final 10% cash. Okay. So I'm being very particular about what I am taking my last 10% and doing. When these weeklies come out, am I dollar cost averaging down on my archer position? Soundhound might be a new position I want to start based on the weekly indicators looking like it's about to take a turn for like positive momentum. So if we take a look at like Soundhound just real quick, you can see like this is getting pretty close. Momentum is slowly sliding upward. And it's just a really cheap, inexpensive wheels company that I've done well with. Last time we got here, you can see this purple diamond, just so you guys know, fully exit. Do not, you might miss a little upside, okay? But as far as timing the top, I think the downside is a lot scarier. So definitely I would take purples into consideration. But I think the potential could be pretty substantial for me with Soundhound. So like I'm trying to figure out where I want to put my last 10%. And Zeta right now, it is on my best in class as far as software goes, but it's not one that I'm thinking of at this moment.
All right, fair enough.
But for people who like Zeta, then yes, I would follow the weekly diamond. Microsoft, Meta, we've looked at. We can take a look at Amazon too, and I can go Nick because I know Nick just pulled up while other people are asking some questions. Amazon hasn't had too much of a pullback. So yeah, when we had trims on the weekly, we can go to daily time frame and see too. Yeah, so here's your little buys and trims. Here's your buys, trim, 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 and then you're under the blue. So now you're waiting for the weekly time frame to generate. So that's all we're waiting on here. But based on this, we still have some more red to go on Amazon.
What was the last? What was the last weekly buy then?
The last weekly diamond was back in 2022. Right here at 112 and 83.
Nice.
So, and then even though these trims happen, guys, right? Well, you're back above the blue line, so now you'd be following the daily time frame to catch all these little waves. So, and then yeah, like I said, Meta is the same similar situation like Amazon was, and Microsoft. They're all kind of just waiting on this. I think Microsoft is by far the best one. And between the Mag 7s, as far as value goes, there's your Google as well.
Yeah, but that's on the weekly though, right? You'd be looking on the daily.
Yeah, I'd be looking at the daily time frame. What I'm looking at though is I want to catch bigger moves, so I will look at both things. I always start with the longest time frame, and then I zoom in. I always look at the weekly, right? Because during this whole bull run here, I can see that the weekly is bullish. Now, when I start seeing some of this curling stuff happening, now I want to start paying attention. So to catch the big moves, you will just look at the weekly time frame. To catch the intraday moves, you'll stay to the daily time frame. And I just always look, I start at the weekly and then I flip to the daily because I want to understand where the bigger picture is. This is the same way I haven't bought ASTS yet when everyone's like, it's a great buy. And I agree, it's a great buy. But when I was looking at this, I was like, yeah, but this is bearish. Like I'm not interested right now with the market conditions and what this daily is telling me right this second because the weekly just looks super bearish. So I always zoom out first before I go into the daily just so I can understand the bigger picture. Because we're all like Trevor, you, me, Nick, long-term investors, right? I need to understand the bigger picture before I can really zoom into the little things.
Yeah, for sure.
So yeah, I look at the weekly first before I kind of dial into that daily time frame. But I still will play the daily on this, but I want to understand where the weekly is to understand where the bigger move is. So, seems like Amazon trims caused you to miss out on the upside. Amazon. We can go to it. Amazon. Again, bigger moves are going to be the weeklies to play them. You're going to get less trims. You're going to get less noise, right? More time frame happens. More action takes place in individual candles. Again, I was just looking at AB with the trim missing out on upside. It's important to take wins along the way because you're going to put that money elsewhere. Now, if I look at, where is it? Right here. Okay. Here's your back testing for all of Amazon. We did 111 trades. I have 103 wins, 7 losses, and 1 break even. My average win was 177%. My average loss on those 7 were 20%. I'm going to take 103 wins at 177% and be okay with these few losses. And I'm sure they came in the early days of Amazon. These are just based on buying and selling.
All the way back to the 90s?
Yep. Yep, I can do it on United Health. I can do it on Nike. I can show you whatever you want to see. But yeah, and that's based on weekly. I can go daily. I can see. So daily time frame, 361 wins and 30 losses. I'll take 361 wins at 44% all day. So yeah, the indicator back testing, we can go to HIMS running the strategy. And this strategy is based off of daily diamonds above and then weekly diamonds. You can see it ignores these daily diamonds and it says the weekly diamond came in. So 58 wins, 2 losses, average win of 87%, average loss of 2.5%.
So it's better than what my HIMS position is looking like at the moment.
Yeah, it would have saved a lot of people on this him's painful drawdown.
Absolutely. Can you pull up these 5 stocks that Nick just posted in the chat there?
This is my short list of quality compounders. Yeah. Let's see here. Melly. I think Melly's bearish, or somebody had Melly in the group too. Let me see. Below the blue line. So you had, let me turn this off here. So you had the pop goes above here. Again, there's other, right, Trevor, you know, there's other things on the indicator that are going to show you there's a resistance level somewhere right here. So pay attention to a resistance level. But again, here's your pop, and then you went up somewhere. This buy alert came in the low 2s, and then you saw 23. So that's good. There's your momentum pickup. I'm assuming this is end of January when everything got hit. So that's the typical for a lot of charts. But weekly, we're still waiting on some bullish activity. We're not ready yet. Waiting on that weekly. App. Same trim on the weekly, and we're still not there yet. But this is the first time it's made it below the blue line in a long time. So that's good. Reddit. So my rule for me, I don't invest in anything that is 3 years, or like I want IPO date and then 3 years later, and then I'll start to invest into a company. So there's your weekly. Sell. Again, weekly diamonds are going to be the bigger move. So if you just want to only play the weekly time frame, it just takes a long time to make any move. But this would be your like long term, like only looking at the weekly time frames. So get somewhere at the 108, 109s, and get some sells in the 240s, get some sells in the 230s range, and then still again waiting on this to give us that signal. Again, in the bear market of 2022, guys, we only got 2 weekly diamonds on Microsoft. So you would have only got 2 opportunities to really buy it during a bear market. So you don't need to go all in on one diamond. You could get one more diamond, but weekly timeframes, very few false signals for good companies for sure. FICO. There you go. Did they have earnings? What happened here? They had what was the catalyst, Nick? That happened here.
FICO. It's all the private credit stuff, like the whole fintech.
Yeah. Because everyone's talking about rate cuts basically, right? 2027. Or like they're saying there's not going to be a rate cut until December of 2027 now is all the fear.
Something like that.
Yeah.
More so rates on the table now.
Mm-hmm. But we got back above here, I'm sure, on the daily time frame. If you flip to it, when it gets, sells on the daily when you get back above that blue. Sell. Drop back below it. So, still, but you're pretty overextended on this purple. I don't think it's ever been that low, to be honest. Oh yeah, it has. 2008. There you go. You're finally getting the MACD momentum to the 2008 levels.
That's crazy, actually.
Yep. Yeah, that's a lot. I mean, that's why I'm loading into SoFi as much as I possibly can right now. It's just like as soon as the whole war thing's over and they get back on track about worrying about the interest rates, Trump's focus, I think then the financial sector then explodes. So I think this is just kind of a opportunity. That's what I'm banking on. A bunch of it, at least Netflix. I think SoFi is almost going to be like 40% of my portfolio.
Damn.
Love me SoFi. Netflix. There you go. There's your little pop. Boom. And then we know there's a gap to fill. 86 was the gap fill, I believe. So waiting on that. But you are currently bullish right now. You're looking to do that back test still, though, to fill that gap, I believe. If you go to regular candles, right, on the daily time frame. Yeah, there's your gap. Which we teach all about that as well, if you guys don't know about gaps. But I use Heikinashi's for smooth charting. makes it easier. But there's that one. I don't have Nodo money. No, I don't have Nodo. SoFi is a sexy chart, I think, when it's coming down here. There we go. We're right here at the support. If you look, I typically like to use the 200 or weighted weekly, 1 week weighted moving average, which we're landing on. Anytime you're here or below is like load up time. April low was that red bar as well. We're kind of right there as well. Like everyone wishes they bought at the April opportunity. Well, guess what? April opportunity of last year is here. So anything below that's just gravy. Trend line, I think, is like 14 if you do the trend line. So that's possible. But my goal right now is just accumulate as much as I possibly can of it. So I'm just waiting on that weekly. But weeklies have timed very well. Weekly sell, weekly buy, weekly sell, waiting on the weekly buy. So right now I'm just in CSPs right now because we haven't gotten a diamond to just do any outright buying. Yep. Love me some SoFi. So yeah, I'm loading up. Based on them thinking that basically no rate cuts are going to happen over the course of basically a year and a half is crazy to me because I think our administration has made it very clear. Yes, I am preserving cash on SoFi. SoFi, Archer are my main ones. I have plenty of hymns. I don't need any more hymns. Fear the gap. Well, we got some covered calls on SoFi, so we're making some premium on it right now, but I'm not going to do it on all my shares.
Wait, can you explain what triggers the diamonds?
Yep. So I have another one that's easier to see. I like to show it based on just, our 2 indicators because I don't want people paying for trading view. So I always display things using this. For me, with having the paid one, there's a lot of indicators we can use that we have custom. All of these are custom indicators, guys. So this is everything that's on that master lead if you have everything display at once, which I normally don't. But this is the histogram basically, but in line form. Okay. Let me try to see if I can hide these other ones real quick. All right. And let me go to SoFi. We'll go to SoFi and go to our weekly. So when this purple line crosses over the white, let me scoot this down and let me hide all the other stuff. Sorry. All right, that should be good enough to see. All right, so when this purple crosses over the white, this is going to be our momentum crossing over the 21 EMA, okay, which triggers a diamond, okay? But I don't want any buying signals when this crosses over, right? Like here, it crossed over to the positive, but we're overvalued. I'm not going to give anyone a buy signal of any sort when a company is overvalued. So it has to be undervalued, and we need to see this momentum cross. This is why on some like Amazon or some of the other Mag 7s, sometimes the company wasn't undervalued when this momentum picked up. So it's important that you understand how to read this momentum bar sometimes on the higher time frame, because when it flicks green is the same time that this purple crossed over the white. Okay. And so when it tricks back down, it's because this purple is getting really close to crossing to the downside, but it didn't. It bounced back up. So, and then it came here, rejected, and back down. So this is just following this momentum based on the momentum itself right now, and then the 21 EMA of that momentum to cross over. And then we have active trend lines, so you can see that this is falling wedge right now on SoFi, and we probably will see a breakout of momentum here shortly. So it's heavily momentum. That is what the diamonds are based off of, and then they only trigger the buys only trigger when it's undervalued, and the sells trigger when it becomes overvalued. You won't see any trimming when a company is considered undervalued. Why would we sell an undervalued company? Correct. As far as the buy signals go, AB. Crossing the downside when a company is overvalued. Yeah, overvalued, undervalued is mainly, I would say, like the RSI, right? When company is considered overvalued and undervalued. Yeah, is that a gap up for PGY? You're talking about gap, which
Yeah, it was gap down.
Gap down.
So you're going to see a gap on the upside eventually.
Yep. Yeah, and I had a CSP on on PGY, and I ended up closing that Thursday when it was green and the whole market was red and it was up like 4%. I was like, let me close that, and we're going to get another opportunity, so we closed it. So PGY is also one right now. What was that?
I was going to say, what does that chart look like for Pagaya?
Yep. Here you go. This was on their that announcement. Trevor posted about it. I know when they announced something big that January, where everyone thought that reversal was going to come into play. So I think they caught a lot of people off guard. But I think that, like you said, right, like FICO, every one of these financial companies is slapped heavy.
Yeah.
So by long term, am I worried about owning any PGY right here? No, not a chance. Definitely waiting on this next diamond to populate here. But you can also see, guys, I'm not buying. I didn't buy this diamond, and the reason I didn't buy this diamond, the MACD wasn't curling. You can see these lines, right? There's three indicators into this one. There's the MACD, which is trending down. There's no curling happening. Now you can start seeing some curling happening. And the MACD wasn't really at the bottom. I like when the MACD is really overextended to the downside for my buying opportunities. I don't really like when it's up here still, because it's kind of like when it's up at the top still, it's really just a subwave of a journey. It's not really like the start of a big journey. So I prefer a full reset to happen, but depending on your trading style. But yeah.
Should show everybody that gap on the daily.
Yep. This right here.
Yeah, man, that's a vicious gap.
You're gonna have a gap up. You're gonna go fill this, and you're gonna hit these resistance levels right here. Here's your 1582 and a 1731 level. So you have these resistance levels to hit. So that's what's nice. You guys don't have to I mean, you just pull up the chart and you can see, okay, that's gonna there's the resistance levels of being kind of slapped down. So if you see any signs of rejection or curling to the downside or anything like that as you present or run up to these levels, you can get ready to trim some and get ready, So that's the good part.
Yeah, when I think the macro shifts, some of these fintech names, like you talked about, SoFi,
Yep.
FICO, Robinhood.
Yeah.
Robinhood is a little bit more sensitive, I think.
Yep.
Same with Pagaya, just because, Pagaya they don't have your top tier loans. Say, otherwise, SoFi would have underwritten them themselves.
Right.
And it has a lot of exposure to, just like retail trading and such. So if people are not trading due to the macro, it's going to hurt the fundamental performance of a company like that.
Yep.
Unless you're something like a SoFi. SoFi's just, it's kind of a glorified bank, really.
I love them. I bank with them. I've used their platform. I think Nodo's a great CEO. He has incentive this year to really boost the stock. They also, like 2 earnings ago, they talked about, he's like, we have all these contracts and revenue coming in on our tech side, but the revenue doesn't hit our books until January 2026, which wouldn't have been brought up in the last earnings because last earnings was still based off 2025. This next coming earnings, you should see some of that tech revenue now coming into the books. And then we also have we're getting closer to the S&P inclusion potential there as well. You have him buying shares, so there's a lot of things going for him. But like you said, you just need clear skies above as far as the macro and the war kind of stuff going on. So when all that kind of clears up, so that's why I'm just taking the opportunity to load up on this. And I don't care if it takes 6 months or a year for SoFi. It's going to be a definitely back to where it was and higher, I believe. But what do I?
agree. And what did he say recently in that interview with Tanner and Tevis? He said something along the lines of next quarter they're guiding for 30, I think it's like 35 or 34% year-over-year growth.
Yeah.
And he said if that becomes their best quarter of the year, he'd be extremely disappointed.
Yep.
Yeah. That's a damning statement, right?
Yep. So AB, your question: am I loading or waiting for a diamond? Okay. That's a two-parter. Okay. I'm loading, but I'm not loading outright buys, right? I'm doing CSPs. I'm getting paid to buy shares right now. Because I think that this current level we're in is going to be where this base becomes. I don't see it really trickling down anywhere lower than like this 14 range. I really think would be like your base or bottom.
I agree with you.
So I'm okay starting to do CSPs and trying to get assigned shares, but I'm not outright buying them right now. If we get a diamond before I get assigned the shares, I will buy shares outright. But there's a good likelihood I get assigned all my contracts, and my break even on all those buys is 1550. So I'd own all of them currently where the stock is right now. Oh man, here come the Zeta guys.
Uh-oh. Okay, before you pull up that Zeta chart, I'm gonna head out. You
Okay.
guys can stay in the call. Keep chatting if you'd like. I gotta go.
Okay. No worries. I appreciate you, Trevor.
I appreciate buddy
hopping on the call and helping us all out. For those that are still in the call, just to reiterate, the $20 a month deal does end tonight at 11:59 p.m. So I did send the link in the chat with the 25% off code. If you want more information, you could send me a text or send Colby a text on DMs. But yeah, I hope you guys all enjoyed the call. I hope you got a lot of knowledge from Colby. I know Colby's very knowledgeable guy when it comes to all this stuff, and I definitely learned a lot today. So Colby, thanks for hopping on, and we appreciate you helping us out.
Yeah, of course. And I'll stay on and answer a few more questions. So if you guys got them.
Sounds good. All right. Hope everybody has a good night.
See ya.
See you, man. Yeah, Colby, take a look at that chart that I just posted in the chat.
Yep.
It has the volume.
Yep.
You can see right around that 14, I think it's like 1417
Yep.
mark. You have that largest big like GTFO
Correct.
shelf.
Yep.
Although you really stuck in like a nice solid volume range here. So I expect us just to chop until we get some good sort of macro.
Yeah. In the bottom of the trend line, I understand too. It just depends on how long we chop for. Could determine if we hit that trend line. Because if you grab the bottom here and grab the top, right, like depends on how much we chop for, but it could just be in this 14 range, but it would take till July of chopping. So we'll see. I don't know if it'll hit this trend line. If it does, it'll just be like, hey, let me take a loan out, let me buy some more kind of opportunity. But yeah, I mean this is the worst case scenario trend line to hit. But that's why I'm not buying outright. I'm doing CSPs right now, and then when we get a diamond, I will outright buy.
Nice.
So, but Zeta.
Yeah, Zeta, I know some people are pretty bearish on Zeta right now.
Yeah.
Like on the technicals.
Mm-hmm. Yeah, I sold out of my position in Zeta, so I don't hold it anymore. Let's see where our Fibonacci's land us. So looks like worst case, as long as we don't lose structure, 1228 would be kind of your worst case pullback. A lot of support sitting there at that 1370, though it looks like a good chunk as well.
We do have a solid trend line though. If you go back to like, I think it's like what 2023, 4. Yeah, you could draw a nice solid trend line through the bottom.
Through there.
It does. It finds supports like 14 something.
Yeah. So yeah, it just depends on if it's next week, right? It could hit this 1370 range somewhere. But
yeah,
a
week for sure.
Just depends on how quick it moves. Yeah.
Although no, maybe I'm wrong. I think the closeout next week is technically still a week. within the month of March.
Yeah.
Because February is not
And it's a short week next week.
yeah.
4 days of trading, guys. So be careful.
Volatile.
Yep, super volatile. Don't be manipulated. I've told pretty much all my guys for us with the indicator, like ignore daily time frame right now. Just play it safe. Protect what cash you have. Be picky. You don't have to buy anything in this world, just so you guys are like aware, right? Like you feel like you're gonna miss out, but it's better to not try to time that bottom and try to catch it. And just better to wait for these confirmations. So that's just what I've been telling our guys in the community. If you end up our community, we have a free community too, guys. If you guys just want to be in the chat rooms, you guys can be in the chat room. It's no problem. We're just helpful. You'll get insight, 2 live streams a week, kind of thing. But we right now are just waiting on a weekly time frames to kind of turn bullish. With the remaining 10%. The remaining, all my other cash is sitting in CSPs right now, trying to buy stock, and just get premium and pay bills and do that. But yeah, just waiting on the weekly time frame to flip bullish for most companies at this point.
Do you have the ability to throw up a 200-week moving average line on this chart?
Yeah.
We're at the 200-week from my. I'm just looking at my computer. It looks like the 200-week is sitting right now at about 1393.
Are you doing SMA or EMA or?
EMA. What's your preference there, anyways?
I prefer EMA. When I'm doing the 200 week though, I prefer weighted moving average actually. Which is currently sitting at 1639. So, and the reason I do it, and I can pull it up on Microsoft for you, which is like one of the better examples to explain why. It's just typically under this line is a generational buying opportunity. Same way here, right? Like it's under it, you want to buy it. Okay. And now we're getting under it again, and you're going to want to buy it. And I'll look up Microsoft just to pull it up for you, how often this happens. Okay. Look at red line here. Okay. Under the red line, which it did find support. So you could run them both, right? When it enters into this zone, if you wanted to. But typically the red one is like, if it hits it or goes under it, it's a huge buying opportunity. The last time, 2013, besides the 2022 bear market, April hit the red line and now we're below it again. So like if you just wait for this red line to be hit or gone under on solid companies, like there tend to be your best buying opportunities for long-term like buying. Same thing, if you waited for the red line for 2022, again, you would have bought here, maybe you got it out again and then bought it one more time when you were under it and then ran the rest of the way. So, but typically I use EMA, but on weekly, this one is kind of my like default to always kind of understand where the worst case scenario is. Same thing with SoFi when we got out of it. We're like, how far could this drop? Well, we're currently sitting there right now at the red line, 1497. I think after hours it closed like right at 1497 or 98. And the April bottom was that. What was that?
Have you been buying Microsoft at all?
No. I don't own any Mag 7s.
Oh, really? I haven't touched Microsoft at all.
No. I'm looking to quickly expand wealth, and it's just not the place for portfolio. Like I just can't do what I want to do with that expensive of like companies. So, nope, I'm mainly into like $50 or less. Like when we were in ASTS and Rocket Labs, I was buying them for like 28 and then that was it. I didn't really buy. I bought one more time when they were 55 kind of range on this like that November dip, and that was like it. But like now I have a hard time wanting to spend the $80 or $100 for them. Yeah, Amazon.
You're looking for companies much under like 100 billion market cap, right?
I mean, I guess I don't care too much about the market cap more than just the stock's price itself. Because I gotta own enough shares for me to collect premium when I sell covered calls. So if I can't own 100 shares of it, it's not worth it to me because I can't generate premium along the way.
I get you.
So for me to own Microsoft, it's a chunk of capital.
For the price tag, SoFi is probably one of those highest quality companies you could buy.
I agree. That's why I kind of am like having a hard time not just all into that one and pull like a Jake on X kind of thing where he's 100% in path. I'm having a hard time not doing that with SoFi right now. What'd you say?
I talked to that guy. I feel so bad for him. He's getting so much hate. He's actually such a nice guy.
Yeah, I believe it. I don't got any problem, but yeah, everyone feels the need to bag on people, and it's crazy. But yeah, SoFi is probably the one where I think Hood and PGY are great opportunities. But if I'm comparing SoFi to these two, I feel safer and confident in SoFi's performance going forward. I love PGY. I think they're going to be great. But if I'm putting my eggs into like one fintech company right now, I'm probably just going in SoFi because of when bad times are bad and good times are good. It does fairly well in kind of all of it. So I feel safer of SoFi not going bankrupt or, than PGY at the current market cap and everything of the company and balance sheet wise and all that. I'd rather have SoFi. So I'd rather just go in. So I'm having a hard time. Like my last 10%, I'm like, I kind of just want it all SoFi, to be honest. I almost can lock in a gain, right? Like you're just locking in 6 months from now, solid gains. Yeah. That's the hard part for me.
Quality, man.
Huh?
I was saying SoFi is very high quality. Like I need to own more of it. It's like at one point in time it was maybe 10% of my portfolio, but then it was obviously crashed.
Yeah. It was 50% of my portfolio on this run up, and then it dropped down to 25%. Now I'm trying to get it back to that kind of 50%. Heavy.
Yeah.
But
I need to increase my position. I think that's something I'll be doing over the next couple of weeks.
Yep. Yeah, I think SoFi is great. They pay a good premium for running the wheel strategy too, which is what I love. So I'm totally good with it. And it's a fairly safe play with still a young growth opportunity of a company. So yeah, I'm super bullish. And if you flip between Hood and SoFi, by the way, it is the same identical chart. It is insane. Look at that. Just boom, boom. Same chart.
Yeah, they tend to move in unison, although SoFi tends to be like a month behind in its move historically.
Yeah.
Like if you just go back to the spring, right?
Mm-hmm.
Or even late last year, Hood started to run for about a month and a half, and then SoFi finally had its run, right? It was a little bit of a laggard, but I think personally, what I think is going to happen if we get into recessionary fears and it's unsure of what the Fed's going to do, is unsure of macro environment scenarios. I still think there's potential for SoFi to continue to perform well for the next couple quarters, but immediately the numbers are going to look rough for Robinhood.
Yeah, I agree. That's why now the opportunities are, I think Robinhood and SoFi are fairly similar. I just like all the fundamentals and the catalyst that SoFi has coming. Like the S&P inclusion, that's off the table for Robinhood. We've done that. We've lived that story. SoFi still has that opportunity. SoFi with the tech side of generating income, it's still just, I don't know what the market cap difference is. What's the market cap? 60 billion. What's SoFi? 20 billion. Right? Like, I'm just going to go with SoFi. The opportunity's there for SoFi. As far as, sorry, another question in the chat real quick. Sorry, I missed the first half. The wheel strategy selling CSPs when there's a sell signal. No, CSPs are when you want to buy a company, not so much that you want to sell a company. Covered call is really when you want to sell a company, but you want to get paid to sell it for a certain price. But if you have a long-term mindset, covered calls is a great way, and CSPs are a great way to generate income along the way of your journey instead of just having to sit there and kind of take the hits along the way. You can generate some sort of income along the way, which is important. And you can take that premium that you collect and put it back into that stock to buy more. So I like to treat premium more as a dividend. And yeah, that's the wheel strategy. Yes. There's 2 steps to the wheel strategy. Again, I have a full course and everything on it. I have this video also being recorded. But yeah, step 1, cash secured put. That just means I'm trying to buy a stock for a certain price. And I will buy, for example, I have SoFi. I'll buy SoFi for $17. And then you're going to go, Colby, it's 15. What the hell are you doing? Well, it wasn't 15 at the time. So, okay, give me a break there. But I'm willing to buy it for $17 on April 17th. In order to buy it for 17 and buy this contract, somebody is willing to pay me to buy it from them for 17. So why wouldn't I just get paid to buy the stock? And that's what I'm doing. I'm just trying to get paid to buy these companies right now. While your money is sitting as collateral in these options, they're also paying me interest on that money sitting there. So I'm earning 3.35% APY on my collateral sitting in these options. And I can adjust it if I want to and kick the can down the road. I just want to try to acquire as much as I can, though. So I'm not really interested in rolling and changing it all up. But yeah, you get paid to buy stock, and you get paid to sell stock more than what the strike itself is. Let's go, Braden. Let me see the question. Sweet. Sounds good. Let's do it. Always available, Nick. Get your questions in there, guys, before I got another. My dog needs to eat and be let out, so a few more questions. And make sure if you do sign up, guys, that you do use Trevor's link. It's very important to give him credit, and I appreciate you guys as much. And use his discount code as well to save you guys a little bit more money to give it a shot. Yeah, so for me right now, I wouldn't be interested in really selling any company because everything is considered undervalued right at this moment. So I'm not too interested in selling any Mag 7s right now. Unless it's like, I don't know. Well, is there one that's close to the top? I don't know. Not Meta. I guess NVIDIA, right? Like maybe. But NVIDIA is such a good company, so I don't know. Tesla. It's just you're getting to the point where companies are becoming undervalued. Even the Mag 7s are still due for their pullback. So what I would say is a slow transition to them. Like as Microsoft maybe rallies, I have a lot of NVIDIA, but been on the fence about it. I mean, NVIDIA is a huge. I mean, their dips come, but their dips don't last too long. Like this has been dipping momentum wise, but we don't have too much of a dip. But I would say support, you'd be looking at like 146 is probably the pullback you're going to get to retest these highs before the breakout. This looks a lot like the SPY chart, which is probably why, right? Like the SPY looks this way is because NVIDIA is a big holding of the SPY. But it's going to backtest probably this breakout level. So you will probably see a drawdown of some sort. But what I would do is I would transition slowly when you have your Mag 7 stocks hit some milestones, all-time highs again on this next run that happens. Then you can sell, and then you can start transitioning to the wheel. But I wouldn't just sell something, especially during this time, because it's so undervalued. Right? We missed the opportunity to sell, so let's move on. Let's figure out, the next opportunity. What's my game plan? Okay, I'm going to be selling some NVIDIA or some Microsoft, or, I mean, if you have some cash to wheel some other companies like SoFi, for example, you can take that premium and then start buying some Mag 7 stocks. You can use that premium for whatever you want, guys. Yeah, I like APLD. I like Navitas. We've done really well with. I love Navitas. Obviously, I love SoFi. APLD, I think, has the most out of all my data centers. I think it has the most amount of time before the next run up. So you can see this like white line down here, right? It's fairly close to getting to this green line. The closer that gets to the green line, the more momentum that there could potentially be on the breakout. So this is why this one is green and then this one is yellow because this white line didn't get as close to the green. Okay, so we're looking for a bigger momentum potential. And we're getting there with IREN. Now APLD is just getting across this 50 line. It's not quite there yet. So I'm waiting a little bit more on APLD, but I do like the company. I just think that there's a little bit more downside to APLD than there is currently to IREN's downside or even Cypher's downside. You can see that it's further. APLD just got across this 50 line, the halfway point. So we still have a little bit more room. Same thing. Nibius is still bullish on the weekly time frame, guys. We're still bullish, but we hit this resistance. So looked like we rejected. I think we had our sell on the daily time frame came in at 114 roughly to get out of Nibius on our alert system. Yeah, Navitas has done very well during these conditions, to say the least. I guess it's one of what I believe to be one of the better performing managing this company. We're above the blue line, so you don't really follow the weekly again. You follow the daily time frame, but we look to be losing. Hopefully we can see a rebound, but this has been trending down. We can look at the bands too. Bollinger Bands. So what I would be, I don't want to lose this trend line. Okay. I don't know what your CSP is for. $7, $8. I don't know what you did your strike for. But clearly the support lands right here and this moving average right here at the $6 range. So $8. So I just watched this trend line here. But $8 in your premium, so you're probably somewhat at like $7.40. I'm guessing what your break even would be. But immediately when you get assigned, you'll be able to set some covered calls if you get assigned. But if we see any sort of spike next week on a short week, you can sell that for profit as well and just close it early and then reset it again. I've flipped Navitas a couple times. Looking at the wheel premium here. Let me go to Navitas. I just closed this one actually, so I need to put the data in there. But overall, about $950, and I haven't bought any shares yet. Maybe I still own it. I don't know. Do I? I don't think so. I gotta update it. You got 400 shares. Yeah. So yeah, on the Navitas for setting covered calls on that. Let's go to the daily time frame real quick. Right, we hit the top resistance here, so this would have been the time to set some covered calls. We hit the top of the Bollinger Band. We hit a resistance level. Time to set a covered call. Okay. Now we've hit the bottom, kind of towards the bottom of this band and the bottom of this trend line. Now is the time to set some CSPs to try to buy some stocks for cheaper. And then we get to the top of the band, set some covered calls, set some CSPs. Okay. There's a lot happening on this chart, and we can easily, I can hide things, and that's the nice part about the indicator. If you only want to focus on the wheel strategy, there's just the wheel strategy indicator settings that you can just use and hide all of the other stuff, hide the support and resistance levels, right? And just use the Bollinger Bands, stuff like that. You don't have to use everything all at once. So just so you guys know, you guys can adjust that completely. Wheel strategy course a part of the deal? Yes, absolutely. Wheel strategy course is part of the deal. If you go to when you sign up on the WAP, you are going to see everything that you see here. Wheel strategy course is right here. There's about 13 lessons in here. Then there's also a course on how to use the spreadsheet. There's courses on how to use the indicators exactly, and then claiming the full access to the Discord as well. So yeah, you get all of this. You get all the AI bots inside of the Discord. You get all the trading alerts. Community is super helpful. Braden's just joined. He's been in the community for a while. I can't ever say your name, but Shashkaluka is also part of the community. Been in there for a minute. So hopefully they get the feeling of that we are a pretty helpful community and helping to better understand along the way and coach and teach. Yeah, so if you, it's 25% off. So we're $19.99 a month for the Founders Club, which is locked in the whole time you're signed up. He has, if you use Trevor25 as the discount code, you'll get 25% off the first month, which should bring you to about 15 a month, without whatever. Watt might charge like the processing fee or whatever, but it should be close to that 15. Yeah. Any other questions? As far as you guys, I'm going to turn on my camera just so if you guys want, you guys have a face to it all. Hello. Hello, everybody. I'm here with you. But like you can see here, if you were to have TradingView and wanted to use a bunch of indicators, you would need to be paying that $15 or $35 a month. And you would only get to use an indicator. You wouldn't even get AI bots or courses or spreadsheets. And another analyst that we have. He does more options. So you can see he puts out his trades on day trades or his swing trades as well, what he puts out there. And then you'll see my trades or anything helpful, like watch to understand why I traded these. So I'll make a video sometimes on why I did certain things. I will do like, here's a risky CSP for SoFi and here's the safe CSP for SoFi, right? So you can collect some premium, figure out if you want to be safer or riskier. And again, when I say risky, guys, when it comes down to CSPs, just remember what the CSP means, which is I'm willing to buy SoFi for $17. What's the risk? I own SoFi for 17. That's the risk. Like, it's no different than if you just bought shares of SoFi at 17. I'm just getting paid to buy SoFi for 17. There is no more additional risk than as if you were to just buy the stock for that price. There is no additional risk. So, can we still see your diamonds on TradingView even if we don't pay for TradingView? Yes. That's the point of our indicator, is that we made two indicators, or we have two indicators. The free version of TradingView only allows two indicators, and the two indicators have about 15 indicators all in two. So you can use those two. So yes, you do not need to upgrade your TradingView. Use their free version and you have full access to diamonds and everything. Well, is that a risk? Because if you were to buy 100 shares of SoFi, you would need that same capital than if you did a contract. So it's no more risk or capital than you would need to buy 100 shares in the first place, right? There is something called a poor man's covered call, too. I don't use them, but there is something you can dive into if you wanted to. It's called a poor man's covered call. So, so yeah, so if you wanted to do the SoFi 17, which wouldn't be how we do the rule today, I did it before the big Friday sell-off, unfortunately, but it is what it is. So right now, you could do a sell put, okay? We do 45 days or less, okay? So right now, April 17th, we'll just go with. Okay, so if you want to buy SoFi for $17, okay, they will pay you $2 up front. Okay, so right now we're not doing that because it's 15. So really what I would do is a 30 delta. So it'd be like 14. So what you're signing is a CSP is saying, I will buy SoFi for $14 on April 17th if the stock is below 14. And what they're going to pay you is 52 cents a share up front. Okay. And on April 17th, if the stock is above 14, you don't buy the shares and you keep your 52 cents per share. Okay. If the stock is below 14 on April 17th, you buy the shares for 14 and you still keep your 52 cents. I'm just getting paid to buy the stock I was already going to buy. Does that make sense, AB? Awesome. All I'm doing is just trying to buy stock for a certain price that I want to buy it for and get paid to buy it for that price. Yeah. No, I totally understand that, Luca. I was just saying that it's no more risk than if you were to buy 100 shares versus doing a contract for 100 shares. It's the same capital, uh, for sure. A smaller account. So that's why I personally like. Even I would say I have a decent account. It's right. It's all perspective. I don't know. To me, it's a fair size account. Um, and I still try to stick to stocks that are $50 or less. Could I do a stock that's like 100? Sure, but I don't want to. It takes a lot of my capital. So you can do what's called a poor man's covered call. Okay. And what you do is you buy a leap, January 2027. Okay. And you buy it for 15. All right. Let's see. Buy call 15. Yep. So you buy this. Okay. And then you sell calls against it. So then you sell a call. Okay. And then you go to like a closer date, but you still do like that 45 days out. And you have to do it above whatever this plus this is. So I need to do one above $19. So I need to go to like May 15th and I need to do it above 19 or at 19. So now I can sell calls against this and I will make money. And this is how you can do it. So now this is technically a covered call. This is called a poor man's covered call, and I can make money and collect premium, and I have to put up way less capital. I need to put up $360 instead of putting up $1,500. It's called a poor man's covered call. YouTube videos on it. There's tons of strategies, but this is definitely a strategy to be used. But it's more to manage. But it you can grow your account a lot faster doing it this way because you can utilize more capital or less capital in a more efficient way. So poor man's covered call. That's what you'd look up. That's like the terminology that has been in the industry, I guess. AB, so that's correct. So yeah, the risk, right? Yeah, the stock goes to 12. Okay. But tell me, what's the difference if you bought the stock? You said, oh, I'm going to buy the stock at 14 and you hit the buy button at 14 and the stock goes to 12. There is no more additional risk than what you already were doing. So that's the part where I'm like, it's no more additional risk. You're actually risking less because you got premium paid to you to buy it for that price. You just collected 52 cents you weren't going to get when you just bought the stock outright. Um, 2025, my strategy year to date was 108% return was my last year to date on my entire portfolio. As of right now, during this bear market, okay, I'm trying to be assigned tons of shares. If you take a look, okay, this is just premium so far. Okay, it's going to show a negative here. One, it's not actually, well, it is negative, but it's negative 3,500, not 7,800, because I did a roll, so it actually boosted one of these up higher. We can go more into that later. But ultimately, right now, I'm still up 29,000 this year on just premium. That's just premium. I haven't even bought the stock and sold the stock for gains. This is just premium I collected for buying stocks for my account, which is roughly almost 10%. So I've made 10% so far trying to buy stocks for certain prices. It's just money you wouldn't have if you just bought the stock outright. What's the difference? Okay. I'm looking at the chat, just waiting to see the response, but I gotta let my dog really needs to eat. So, So 29K premium all from doing what you were saying. Yeah. So far just premium from buying from CSPs only. And some covered calls. Not too many covered calls though. But yeah, overall it's just I'm trying to buy stocks for certain prices. There's my whole log right here of basically mainly puts, me trying to buy companies. So on average, I try to go into the stock looking at like a 10% return in premium right now for 35 days, which is an annual return. Just premium annual return right now is 123% if I can do this every 35 days. Okay. When I'm exiting these trades, I'm actually exiting every 7 days, collecting 3.36% return. And that's an annual return of about 208%. And this is just based on premium. This doesn't include if SoFi goes all the way to 45 or 30. And then I set covered calls and collect premium there. So there's more money to be made during a chop market. At least you don't have to sit stagnant and just say like, oh man, it's going down. Oh well. Like there's money to be made. So I personally just like to get paid to buy a stock for the price I want to own it for. When we are getting close to like really strong support levels. Like for SoFi right now, we're at a strong support level. 15, 16 range is super strong. I'm okay setting CSPs to own the stock right here, but I just want to get paid to buy it for that price. I don't want to just hand my money over to SoFi and just say, here, please go up. I want to say, hey, I'll buy it for you from you in 30 days, but you need to pay me some money. No, so SoFi's isn't a 10% return on that one. If I go to sell, sorry, let me go back. Well, I can look right here. So wheels, SoFi. So my last ones for SoFi, okay, because my $17 one was paying me $1.46. So that's an 8.5% return in capital for me. So I was collecting $1.46 per share to buy it for 17, and I'm buying some at 18 and collecting $1.95 in premium, which is a 10.83% return, which I'm looking to buy. So right now they're both about 10 to 8%, so 9% for SoFi's wheeling reasons. But this is money I wouldn't have collected if I just was buying the shares at the 17 and 18. I was fine. I'm fine buying SoFi. I have no problem. I just want to get paid to buy SoFi. And I'm not willing to really risk the opportunity that SoFi is providing me right now by like not being aggressive consuming these shares. So at the expiration date, that Friday at close, Monday, you will have the shares in your account or the capital back in your account, depending if you got the shares or didn't get the shares. So you don't have to do anything. But if you want to close it early, you can and give back some. So for example, like here's one. I opened one for 70 cents and I closed it early 2 days later and gave back 41 cents. So I was able to keep 29 cents and I didn't do anything. I just opened it and then closed it early because the stock went up to pay me sooner. And I gave back $205 and kept $144. So you don't have to keep it the whole time. You can just swing these if you want and collect some here, some there. So, but that's going to be all for me, guys. I can hear my dog. He really wants to be fed. But if you guys want to learn more, again, you guys can join. Make sure you get the link from Trevor. Make sure you use his discount code. Live streams for me are Sunday and Wednesdays. Sorry, I'm playing with a freaking pocket knife. So I appreciate it. There's plenty more to learn. We're going to go over a bunch more. Trevor and I and Nick, we're going to start getting more, group calls together and everything, kind of go over stuff. So I appreciate your guys' time and opportunity to talk with you guys. Hopefully I see you guys in our community as well. Trevor's in there as well talking, so we're all there. So I appreciate you guys. See ya.